Good morning, fellow traders. How are we doing this morning? Hey, Kirk. Hey, Speed. Good morning. How are we doing? Hey, thanks for the subscription. Sorry, I can't pronounce that name, but thank you. Hey, Rylan. Good morning. How we doing? All right, we are ready to roll this morning. We got our coffee. We got some cookies. And it's a new day. It's a new day. It's going to be a great day. I hope everyone has a very profitable day. I hope you have the biggest day you've ever had. Good morning, futures. Good morning. Hey, that's important, futures. Mm-hmm. Mm. All right. We have market is just going up the way this looks. I was hoping we'd pull back here to this like 42.10 area before we make another push higher today, but this morning seems like we're just staying up here. So 42.30 is going to be a key level. We might go higher today. Yeah, it sure feels like it. Yep, it does feel like that. That's okay. We will hopefully not have any connection issues this morning. Hey, Anna and Martin, good morning. Hey, Anna. First time I see your name, welcome. Thanks for tuning in. I appreciate it. I hope everyone has a great day. Indie Scalper, hey, good morning. How are we doing this morning? Let's have a great day. I feel good this morning. Had a great night's sleep. Ready to have a good day. Hey, well, that's great to know, Anna. Awesome. Must be the YouTube algorithms. I guess they like me, huh? Wow, I'm curious, what did you search for? Did you just search like basic about Apex that you were wondering about and my channel came up? That is cool. I'll try and answer any questions that you have about Apex. Awesome. Yeah, let me know if you have any questions or what. Are you new to prop firms? Are you new to trading? Just testing out the waters or looking at different options? And yeah, I remember being there. Hey, Jordan. Hey, good morning. That's the first time I see you as well. I created this channel about 5 weeks ago. So that's how long I've been streaming. Okay, Anna, that is a very common question actually. And I remember when I first came into realized prop firms, yeah, I did a lot of research. I actually was originally, I heard about Top Step or a lot of people were promoting Top Step as the most reputable, and did some research on my own. And yeah, I settled with Apex. I thought they offered the best value. Maybe they don't have, like, some people don't like the trailing drawdown. But for me, that wasn't really that big of a deal. But just the value with their 80% discounts, it was a no-brainer for me. And they definitely are legit. They've paid out over, I think they've paid out close to 20 million. They've paid out more than double what the next top prop firm has paid out. So they are definitely legit. You will definitely get paid out. And yeah, it's just a matter. I don't know. I think it's pretty cool. The prop firm, I think it's one of those perfect industries where it offers a benefit to the customer, and it obviously is also a benefit to Apex. They make money when people fail. But it is also a great way to learn and teach yourself about trading without having to risk $2,000 of your own money to put into an account. And, so for a 50K account, you can basically get it for less than $40 and you have unlimited profit, unlimited profit potential. So that's the thing that really intrigued me about it. And yeah, I really, no regrets. Yeah, I know, Martin. In which direction? Martin, if you could just tell me which direction that it's gonna go, that'd be great. Well, thank you. Thank you. I try and give my objective thoughts. The other thing, okay, honestly, the biggest thing about Apex that I really, really like is that they listen to their customer base. Here about a month and a half ago, they were thinking about tweaking some of their withdrawals. Not withdrawal, but basically they wanted you to have a little bigger cushion when you make a withdrawal. And a lot of the traders did not like it. And after listening to the feedback, they reverted the rule and did not implement it. And then just here last week when people were having connection issues, a lot of people had connection issues and they lost money because of it. And they literally went back in, and every account that was basically any account that lost money in that time frame, regardless, they didn't even research if it was actually because of the connection issue, but if it happened during this time frame, any of your losses, they reimbursed you. And if you had any wins, you could keep them. So they went above and beyond of what they had to do. I know of people that during that time frame, they actually didn't have any connection issues and they actually had losing trades, and they reimbursed them for those losing trades because it happened in the time frame of when there were connection issues. Yeah, Martin, that's right. Like 90, I mean, it's kind of the same statistic that you see in the market. If someone creates an account and they put in $1,000 of their own money, 95% of those people are going to fail. Now, I always am curious about that statistic because for example, when is it considered that you're successful? Know what I mean? Because, okay, so like, for example, Martin, I always question the 95% failure percentage, or I'm always curious how it's calculated because, okay, for example, let's say I put in, like for me, eight years ago when I started trading, and I put in $2,000 of my own hard-earned money, and 3 months later I blew that account. Okay. Then I put in another 2,000, and then over, I think it was 3-4 years, I grew that account from 2,000 to 11,000. Okay, so now statistically, was I a failed trader or was I a successful trader? Or, you know what I mean? Like that, if anyone has ever blown an account and then that's what percentage goes as a failed trader, then anyway, I think I always wonder how those statistics are actually calculated. Recommending ICT? Yeah, a lot of people do. And if you're just starting out, and that's great, biggest piece of advice that I can give you is find what works for you. Don't listen to other people telling you how you should trade. Find something that you're comfortable with, that makes sense to you. If you listen to ICT videos and they are not making sense, look for simpler strategies. Like, don't force yourself to trade this way because this is what people told you to trade. But ICT is a good teacher. I've heard good things about him, so I'm not, it might be for you, and that's fine. But if you start it and it doesn't make sense, and there's other strategies that you just make more sense to you, then you trade what is right for you. Don't listen to everyone else telling you how to trade, because in the end, it's going to be on you. And I would much rather lose or win on me than I would on, okay, this person said I should trade this way, so I'm going to change and trade that way. Yeah, the only thing is, like, he has so many different strategies and so many different videos that I mean, he has a ton of content. And if you watch too much, it just is confusing. Like, I would suggest pick one strategy, or maybe browse through the different strategies and find one that really is easy for you to understand, like that just clicks. You'll kind of know it when you see it. And okay, yeah, if he explains it, you're like, okay, yeah, that makes a lot of sense. And you just then only focus on that one strategy. Don't try to learn 7, 8 different strategies at the same time. And then I would recommend, yeah, do paper trading, but just understand when you do paper trading, you're only paper trading to see if you have an edge in the market. Like, you're basically just paper trading, following your rules to see if the strategy that you have works. And don't read anything else into it. A lot of people make mistake of, they paper trade for 6 months, they're very profitable, and they assume it's just going to be the same when you switch to real money, and it won't. 90% of trading is psychology, and it's a whole different ballgame when you go in with your own money. All of a sudden, things don't. It's just different. But good luck. Good luck, Anna. Glad you tuned in. Glad you found my channel. I appreciate it. I wish you lots of luck. It's fun. Or I don't know. I love trading. I love the challenge that it represents. Yeah, I love the like, it challenges me and my just mental capacity. It is definitely a challenge, and it is not easy. So the other thing, Ann, is don't, how do I want to say this? There's a lot of YouTube channels where you just see them win, and they kind of misrepresent how easy it is. Like, they represent it as, oh, this is easy. And anytime that you see that and they're trying to sell a course, then just don't follow that channel. Don't. Because they have one motivation, and that is to sell a trading course or sell a mentorship. And almost all the time, they will only show winning days, or most of them winning days. They might sprinkle in a couple losing days here and there. But I'm always very, very wary when people are trying to sell courses, because they misrepresent the truth about trading. So I started trading in 2012. I traded until 2018. I think it's 2018, 2019. Then I took a break and started back up actually when I heard about prop firm trading. It really intrigued me. I thought it was a genius business plan where it's awesome for the customer. And I can also see from a business standpoint how it's a great business plan. So I've been trading prop firms for, man, when did I start? I have to actually go back and look, but it might be close to a year. Maybe not quite a year. Well, this market isn't doing much. It's 940. So I'm hoping if we can get a pullback here. Yeah, I agree, Martin. And the thing with this psychological part of trading, there's almost nothing that you can do to prepare yourself for it except just to actually trade. And that's where I feel like prop firms is really beneficial because it allows you to have some skin in the game where you will experience that psychological part of it, but it won't cost you as much money learning, if that makes sense. All right, here we are. Yeah, I'm really curious what the market's going to do today. Powell talking at 11. Hey, Conkilla, welcome to the channel. I'm really curious what. All right, here we go already. Yeah, exactly, Martin, exactly. Basically, when you're trading, your biggest foe, like your biggest opponent, is yourself. The guy in the mirror looking right back at you. That's the guy that you have to battle the most when you're trading. No doubt about it. I had to battle that guy yesterday. I battled and I lost. But today's another day. All right, now we're pulling back again a little bit. Kind of expecting more of a pullback here before we rip higher, but maybe not. Maybe not. So a little bit of an update on, obviously yesterday was a really just, ugh. Hey, Christian, welcome. I know, exactly, Christian. By the way, I was looking back at when I was watching that trade yesterday, Christian. You were the one that was calling me out that this is not in your plan. You were exactly right, too. No, that was definitely a terrible trade. Definitely just a revenge trade that was very ill-advised. We'll try not to do that again. Thankfully, it was only one contract, but it was still not okay. Oh, because of leverage? Yeah, that's definitely something you have to kind of get used to. Not making sure that your size is correct. Making sure, your risk management is very important. Seconds later, you clicked. I know. It was very painful to rewatch that, I'll be honest. It was very painful. I actually started, it hurt to see. I'm sure it did. Yeah, yesterday was just, I need to, so, okay, an update. I know I talked, I don't know how many people were here, but yesterday I was talking a little bit about changing my strategy. I know we talked about splitting up the accounts. Hey, Christopher, how we doing? Okay, now here, kind of interesting, but man, I was hoping for a little more of a pullback here before we try and make new highs. Also kind of curious if we're going to make new highs before Powell speaks. Kind of was, or I wouldn't be surprised if we just kind of chop here or pull back a little bit more before Powell speaks. I'm not really sure. Yeah, exactly. That's what I mean. I'm not, might be difficult to get a good setup today, to be honest, because before Powell speaks, kind of expect it to be a lot of chop. And then when Powell does speak, it's so violent that I'm not sure I want to be trading when he's speaking. And it really varies how long he speaks. Like he'll be speaking sometimes for an hour, and in the middle of speaking, all of a sudden he says something weird, coughs twice in a row, and then the market's tanked 10 points. So it's always a little bit of a crapshoot when Powell's speaking. Oh, but going back to only trading reversals on highs and lows. Don't think we move far. Yeah, that's kind of was my thought. I'd be more interested. I don't want to really short up here. I'd rather look to buy like down here, like the 4210s. I would be great. But we'll see. We'll probably just sit on our hands for the most part before 11, unless I see a really good setup. Interesting. But anyway, I was looking back. Oh man, this is now kind of interesting here, but I just don't want to be buying this close. And I mean, we could just rip higher and make new highs before Powell speaks. I wouldn't be shocked. $42.12. I mean, I'd love it to be $42.12. I was looking like in the $42.11, like this range right here. Yep. Anyway, I was thinking about different strategy. So one thing I did change, and I've gone back and forth, but I did change a little bit on my ATM strategy. If I have 19 Apex accounts, I do. Here, I'll show. This channel is very important that I am fully transparent. Okay, that is like really important to me because yeah. But right here are my accounts. Anytime you see an Apex account and there's a PA in front of it, that means it's a funded account. I'm not sure if I can count them all, but 1, 2, 3, 4, 5, 6, 7. Let's scroll. 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 accounts. And I actually have another one evaluation. I have an evaluation account that is also this account right here is also, you can see, is past the profit threshold. So this one is past my evaluation account. I just had to make one trade today to get another trading day put in. I think that account I will get next Tuesday. I'm crazy. You're probably right. I've been called worse. Anna. No, okay, so mentally, I was in a really good place yesterday. Okay, so I talked to my accountability partner / my wife. And anyway, I had a really good, I had a good talk. I was just kind of sharing with her some of my thoughts and changing basically, okay, should I split up the accounts? Because I know a lot of you suggested that I should not be trading all 19 or 20 accounts at the same time. And I hear you loud and clear. You definitely have a valid point. And one thing that yesterday really pointed out, and that was that maybe even since I started trading these accounts, since I started trading these funded accounts, I have been more trading I've been more just trading not to lose. And I have been trading with a fear of losing, like for sure. That I don't like it. I hate it. I hate when I'm in that mode. If she's trading, no. Oh wow, that's awesome, Christian. You know, I've kind of tried to convince her too, but she's not interested. I'm just happy that she supports me and it helps to have an accountability, someone that you can bounce ideas off, and also someone just to hold you accountable and make sure that you're not going off the rails. All right, here we go. This might be the move to try and get new highs. We shall see. Anyway, so yeah, definitely like that fear of losing, and I wouldn't even class it as much as fear of losing. Is like fear of failure is that's my biggest fear. And it's like the thought of blowing 20 accounts, or the thought of blowing even 4 accounts, or whatever it is. Like, I just want to get to the payout, obviously. But that fear of failure and the fear of losing is, I hate that. And I know it's not a recipe for success. Like, if you have the fear of losing, I mean, I think anybody and everybody, when they enter a trade, there's going to be your anxiety and stress level is going to slightly increase. Okay. I don't think anyone, I hear people say you need to trade without emotions. Well, that's just not possible. You need to trade and control your emotions, but you need to be in control of your fear. And I'm just trying to, so I was trying to do some research. Okay, so how do you get over a fear? Right? Because I'm like, okay, right now I have that fear of losing. How do I get over it? Like how do you push through, and how do you get over your fear? And I heard someone explain it. It's kind of just, it's very true, is so if you have someone, the psychologist has someone that has a fear of cats, or let's say they have a fear of elevators, something like that, the way that they will get them to get over that fear is not by just having them avoid elevators and always use the stairs. Obviously, if you have a fear of elevators and you just always use the stairs, you're just avoiding your fear. You're not actually conquering your fear. You're not facing your fear. You're just avoiding it. But it's still there. And the only way to avoid it, or the only way to get over your fear, is to just You have to get in that elevator, and you have to constantly get in that elevator, and through time and repetition is how you get over the fear. There's really not any other way around it. There's not a magic button that you can just hit and all of a sudden, oh, I don't have a fear of elevators anymore. No, it takes time. It takes repetition. You have to always go in the elevator. And finally, after maybe 100 times of going into that elevator and nothing happening and your fear, you realize that, okay, all of a sudden you don't have that fear anymore. So yeah, it's kind of that was kind of it, that made sense in my mind of like the correlation between that and the fear of losing. And I was like, it's just something like, I don't know that there's a magic way of, I feel, okay, and that's where I feel like if I would scale down to only trade one PA account, yeah, I think I maybe wouldn't have as much fear of losing. But I'm just, I guess, I don't know, am I just then avoiding my fear and not facing it? I don't know. But anyway, my TED talk for the day. Exactly, Christian. And see, and that's something. So knowing all that and coming and having that click in my mind where I'm like, you know what, that's so true. And when I enter a trade or when I'm in a trade, I just need to trade the chart. Just whatever the price action is showing, I just need to trade that and not worry. And if it loses, it loses. Before I enter a trade, I do, before I kind of had that ATM strategy. My ATM strategy basically was set. Like I had an 8 tick stop loss, 10 tick take profit, and then my runner. And that's how it always was. It was just kind of a set amount. And I'm going to change that a little bit to where I need to have a predefined exit before I enter a trade. And depending on where that exit is, I need to change my size accordingly so that my risk is, I'm okay with the risk. For example, if I go to enter here, I'm going to try and have my stops a little bit wider where I have a little bit more room to let the trade work and then just trade the chart. Don't trade your profit and loss. And that's something I feel like I was doing. So I don't know, food for thought, but I'm, if I enter right here, instead of maybe having my stop loss right here, maybe I have it down here because looking back at, I think over the course of last 2 weeks, there's been multiple times when I've gotten stopped out only for the trade to go in the direction that I was looking for it to go. I just didn't allow enough breathing room on my trade. So, and obviously there's a fine line. Like you need to predefine your risk and then stick with it. And that's, it gets very dangerous when you have determined your risk beforehand, you go in, and then once you're in the trade, all of a sudden you start moving your stop loss down, and further away is what I don't want to do. And I've done that in the past where I have had a habit of doing that. So definitely something that I predefine my risk, stick to it, stick to the plan. And I'm not saying that I'm going to be able to trade immediately without fear of losing. I'm not saying that. I'm saying in order for me to get over my fear of losing, I need to push through it. I need to get used to it. I just need to mentally acknowledge that it's real, but continue to talk myself through it when I'm in a trade that, hey, this is This was my stop loss. This is, I'm totally okay if I lose this trade. It's not going to break me. And if I'm not okay with that before I go in, then I need to reevaluate my size, or maybe I need to find a better entry. Anna, trust me. Anna, if you go back and watch some of my videos from last week, I dealt with that exact thing. I'm still like, I don't know. I don't want to say that I'm still kind of in a losing streak, but there for about a week ago, man, any trade I took, it just went immediately against me. It was comical. Actually, no, it wasn't funny at all. Furthest thing from funny. But man, that is not a fun place to be when as soon as you click on one direction, it just immediately goes against you. Biggest thing, Anna, is that happens, just make sure that you're still following your plan. If you start feeling the urge and the tendency to start just clicking buttons and revenge trade, then walk away. Walk away. I always say walk away. Find something you love and enjoy doing. For me, it's photography. Just grab your camera, go out, take pictures, take an hour. And if you can get in the right mindset again, fine. If not, take the day off. Master your technique. Right, you're right, Martin. And that's kind of where, I 100%. Hey, Alpine, good morning. Good morning. Yeah, and that's where I went back to as well. And I think my percentage is like 65 something percent. So like 65, almost 66%. And the problem was that when you have that fear of losing, then all of a sudden you're cutting your profits short, and even though you have maybe a 65% win percentage, you're cutting your profit, or at least that's what I was doing. So hang on one second. I need to take this call. All right, we're back. Market kind of doing what we expected so far. Just kind of feels like it's waiting on Powell, which makes sense. Look at his screen on the phone. Wait, you can see my phone? Need some Powell power. Only thing I would be like interested in, and this is okay. So the other thing that I am going to change, and that is I'm going to trade more like I was trading with my evaluation accounts. Oh, you want to? Oh, Alpine, sorry. I saw your comment. I meant to reply and I forgot. So let me switch my view here so you can see. So if I look here at connections and I go to configure, so my IQ feed, basically this IQ feed you needed for setting up this simplicity chart. That's why I have it. But again, I don't really use this simplicity chart. I can't talk. But yeah, that's what it's from. But yeah, you can connect multiple connections at the same time. You basically just set up it the same way that you would set up your Apex connection, and then you just connect to it. But it kind of hurt me yesterday because if I didn't have that feed, and that feed, I only pay for basically the VIX, I don't pay for the live data feed for the futures, which is why when I got disconnected yesterday, no, it's not free, sorry. But it's not that much money because I just pay for the VIX data feed. That's the only thing I need it for. But then by default, you get the data feed for the futures, but it's a 15-minute delay, which kind of hurt me yesterday because when I got disconnected from Apex and I didn't know it, the price was still moving for me. So I thought I was connected and I didn't know that I wasn't, that I was on a delay. Anyway, whatever. It is what it is. Just one of those perfect storms. Yeah, seems like nothing's free anymore, Alpine. I'm kind of interested, like if we come down just to get long, like especially, like I was saying, I am going to open up my trading playbook a little bit. I'm going to take some trades on basically what's like, for example, if I'm seeing this price action or I have a thesis for the day where I'm like, okay, I think we're going to pull back here and then we're going to make higher. We're going to go higher. Then I will, like if that move happens, I'm not gonna like. I'll wait for a good entry based on price action, but I'm not gonna wait for it to pull back to the EMA precisely and only enter on a pullback trade, if that makes sense. But not gonna be reckless. But if I see a move happening that is in my plan, then it's kind of stupid not to take it. Do you watch Apex Panda Scalping? Yeah, I've seen him. Yes. What was the website, or where do I get that chart from? This simplicity chart. This is from Apex. So the strategy on this basically is, so this is basically the strategy for this is to catch big moves. Like that's what it's for. And you basically enter when, like, see, it's kind of hard to see maybe for you guys, but when you have a green line that's dotted and then you have a green line that's solid. When the green line, okay, like when the green line and the solid line is in an upward trend, like right here, then you enter on the next candle bar. As soon as the body is above this body, then you enter. That's basically the strategy. Then, this is me saying what I remember. But then you basically stay in this trade until you have two red lines going down. So it's meant to catch big moves. And I've never, I've never really tested it, to be honest. So, yeah, it's bye-bye money. Yep. Yeah, and I better be careful what I say. He released a video that he was saying that he has withdrawn 116,000 from Apex since September, which I think is awesome. The only problem is, according to the withdrawal stats, it doesn't match up. So I'm not quite sure what to think of that. Hey, the student struggle. Well, welcome to my channel. I appreciate it. Thanks for tuning in. Kim, I'm just curious, how did you find me? Wait. Oh, okay, student struggle. After you lost your PA account from last week's glitches? Okay, student, so were you trading? Did it happen? Oh, man, I have to go back and look at the exact time frame that Apex had described. Oh man, now the message isn't there anymore. Browsing around YouTube? Awesome. Student, so did you submit a ticket? Because, okay, the reason I say that is last week, Thursday and Friday, I believe. Okay, 11th and 12th. Yeah, okay, that is the date. The 11th and 12th. And if it happened in the morning, I think between, don't take my word for it, but I think if it happened between 8:30 in the morning and 10:30 in the morning, then you need to reach out. You need to reach out to Apex because they will reimburse you if the losses happened. If the losses happened in that specific time frame, because they basically went back and verified that that was the time frame when they were having connection issues, and they were going back, and any losses that incurred during that time, they were reimbursing those losses. So basically rolling back the account to whatever, you know, the balance was before you took that trade. So yeah, submit a help ticket because yeah, they did. I just Christian, I just logged in, but that message wasn't there anymore. So I'm not sure, was it just they took it off? But please submit a ticket and explain, you know, just do your best to explain what happened. But if they happen on 11th and 12th in the morning, what? No way. Oh no, Alpine. Okay, student, if I mean that sounds weird. Yeah. Then I would reach out to them again. That sounds weird because I was pretty sure, maybe I'm wrong, but I thought Apex automatically closed your trade at the end of the day. Like it's actually impossible to hold overnight. Like they will just automatically close it if you're still in a trade at the end of the day. But maybe I'm wrong on that, but I'm pretty sure that's the case. But I would submit another ticket, student. I would submit another ticket and explain to them what happened. And yeah, I have faith they'll make it right. Unless it's something that they can see on their end that I don't know, but if it was a glitch or an error like that, they almost always make it right. So I would definitely reach out to them. All right, we just kind of trading in this channel. Not much to do here. I mean, we're kind of in an uptrend, maybe. You know, I didn't take a trade during those days. I thought after the fact, I'm like, man, I should have I don't want to say what I thought. But basically during those times, during that day, in that time frame, anyone that lost money got reimbursed and anyone that made money kept it. So it was like you couldn't lose if you traded in that time frame. Now, I'm not recommending anything based off of that. Okay, this is still think we are going to pull back more before we make another push up. My opinion, which I have been wrong, but I don't remember ever being wrong, but it's probably likely I have been wrong. What happened, Alpine? Was it the tick? No, the tick was yesterday. So you were really, or you had reached the profit threshold on both of your Apex accounts. Am I right, Alpine? Also, I've been working on my slow grind. Yeah, I know. Everyone's just waiting for Powell to speak. Problem with that is once Powell starts speaking, then the market's going to be too crazy to make a trade. Join the gang, Alpine. I've done the same thing. I've done the same thing. Was that on the NQ? So also, as you guys will notice, I actually do have the NQ chart up. I have it up now. I have been watching it. I'm trying to reconcile with NQ. We're trying to get back together. And we've started talking. We are currently at least on talking terms now. So we have yet to make any final decisions on getting back together, but there's a little bit of hope there. She keeps saying that she'll be nice this time, but I'm not sure I trust her. But NQ here definitely is a lot more of a downtrend than what ES is. Yeah, Paul speaks at 11. Yep, exactly. 30 more minutes. 30 more minutes. Yeah, it's basically just... I mean, here's like, you could convince yourself to take a short trade here, maybe to the bottom of the channel, but I'm not interested in shorting at this point. My overall thesis for the day, here's what I've wanted to do. I don't know if this is like a good idea, but I used to do this. And where is the whatever? I used to like draw on my chart where my thesis is for the day. And just to watch it play out. Or to help, I guess more like to help guide me if the market is going where I want it to go. But this is basically what my my thesis is. And this also allows people to see when I'm completely wrong. But that's what I'm looking for. I'm looking for this to pull back into this area to then go long. Obviously, this will probably not play out because Powell's speaking. It's probably going to go wee. But how long I've been with Apex? Oh boy. 9 months? I think. Close to that. Not quite a year. Not a year yet. If NQ dump now, you'd be okay. All right. Let's all cheer for Alpine here. This needs to take a dump. I'll see what I can do, Alpine. If I had a trading background? Not really, no. No, I didn't. I always, financials, business financials and stuff was my background. I really enjoyed numbers. But no, I basically self-taught myself by, I don't know, YouTube, books, and then I did all that, then I paper traded, and then things got real. I still remember I was like, okay, I'm gonna get into this day trading. I'm gonna take it serious. I'm gonna do it. This was back in 2012, where things were a little bit different in 2012, but that was my plan. I'm like, I'm gonna take this seriously, and when I make my mind up to do something, then I do it. And I mean, I spent 3 months just researching YouTube and books and everything. Then I spent about 4 months paper trading. And, I thought I had it all down pat. Like, I felt invincible. I was making really good profit on my paper trading. I thought, man, this is easy. Maybe I didn't feel like that, but I just felt, how hard can it be? I just follow what I did on my paper trading and it works. Like, that's all I need to do. It's not that hard. And I put in my first $2,000 and 2 months later it was gone. Actually, a month later it was gone. So then I started to really learn trading, because there's a key component that I was overlooking, and that was the psychological part of trading, the mental aspect of trading, which you just don't experience when you're paper trading. I'm sorry, Alpine. I feel like I'm not doing my job. Maybe if I draw a line right here, it won't go past it, huh? How about that? I'm trying to help. Okay, Garcia. Sure. Got it. But yeah, at least you're getting a payout. That's what counts. I don't know. I don't know, Alpine. I drew that line and it might have worked. I don't want to get ahead of myself, but I feel like I helped there. I feel like I helped by drawing that line. Yeah, I know, Alpine. Exactly. I know, Blippity, right? Where do you need me to draw a line, Blippy? Holy, okay. Alpine, I feel like I need at least partial credit for this trade because as soon as I draw that line, boom, it rejected. You're welcome. I'll send you my address if you want to send me the check then. I have discovered a new way of trading. I'm going to make a YouTube video. This trading strategy is called the line. Exactly, Blippy. Oh man, that's crazy. The line held. Hold, everybody, hold. Okay, now what about if I do this? I'll move it down to right here. Now, I think we're going lower. Hope you're still in it, Alpine. Where do you need this to go? Exactly. Where do you need it to go, Blip Alpine? Tell me, hurry. We're running out of time here. Hey, I need to keep pushing it down, Blippy. I need to push it down. Uh-oh. Don't make me move the line. I'm not moving it. Oh, no. Hold. Everybody hold. Feel like the line should be a little bit more bold. It's kind of thin. Uh-oh. Uh-oh. Don't do it. Don't do it. Well, I tried. All right, I'll move it back up here again. This is where it was. Maybe not. Maybe. This channel is 90% entertainment and 10% trading. You know what? Oh, never mind. Wouldn't that be hilarious if this would be the high of the day? 13,908, or it wouldn't get past this again the rest of the day. The line strategy, it's very unique. I'll have to probably sell a course. I'll have to implement my own course and the line course. For $100, I'll teach you how to trade the line course. Then once you pay, I have one video that you get access to, and it's a 30-second video of me drawing a line. And then just giggling afterwards. I feel like that is as helpful as some of the other courses that you buy. Hey, look, I mean, I don't know. I should have kept my line right there because it definitely made a difference. You can see it went past a little bit, but Dear. Too funny. Here we go. Never move the line. That is actually very key. That's the advanced. The advanced course will be a 30-second clip, and it just says, never move the line. Yeah, futures. I drew a line right here, and I prevented the price from going up further. So I'm now selling a course, and the course is called The Line. Oh, now, Alpine, now you need me to do it faster? Man. I'll see what I can do. You need 8. True. Maybe if I... Here. Feel like if I do this now, that line, that definitely is an added $10 value. Okay, I'm trying to get it there for you, Alpine. It's holding. Maybe my advanced strategy is that I need to draw the line where this needs to go to. Like, or maybe I just, here. It needs to go down to here. Come on down. Right here's your target. I already know what to do here, guys. I got it. I got it. We need to make this line green, obviously. Obviously. Yep, definitely. 2-line strategy. I'm renaming it to a 2-line strategy. I'm going to have to delete this video. I'm going to have to delete this VOD so people don't steal this strategy from me. Come on now. Come on. You know you need to hit this line. You know you want to do... Hey. Okay. It bounced off your order. I thought you said 70. Oh, no, I didn't get it to 75. You know what? Here, I'll help. Right there. Okay. Okay, you're fine, Alpine. You're fine. We'll get it there. I think. And why are caps annoying? I don't know. I didn't say they were. This is the NCT strategy. I need to create a separate channel called NCT strategy. And it's just me drawing lines. No, this line is green, so it's a magnet. It's fine. It's fine, Alpine. It is fine. This is coming right down to it. It'll be fine. Come on, NQ. Come on. Down to the 75s. Come on, you can do it. You can do it. You ready? You ready, Alpine? We're coming. Oh, come on now. Hey, Steve. Welcome to the comedy hour. Okay, so you did 79. You've had enough. Well, it's going to hit the 75. I have faith. I have faith. But if you got out, then we're good. We're good. You Your stream is watching my stream. Well, I don't know how long they've been watching, but we're having a little comedy section here while we're waiting for Powell to speak. We drew a line right here. Now, this is hard to believe, but we drew this line before this all happened. Because Alpine needed this price not to go any higher than this. So I just drew a line and it immediately just rejected. So now he needs it to go here. Boom. Alpine, there was 75 hit. So, okay, anybody else? Where do you need the price to go? This two-line strategy, so far, 100% win rate. 100%. This is not trading advice, by the way. Is it actually, Alpine? I love it. I love it. The two-line strategy, it works. All right. I think we need to move it down here. Yep. There we go. Come on down. I know. I need a sound. I need a sound effect. I need to add a sound effect. Ding, ding, ding. Now I'm curious, what do I do? I'm going to have to be really looking into this two-line strategy here. Oh, man. That was pretty awesome, though. That was pretty awesome. Hey, now, I'm just not going to say it. I'm not going to say anything. I'm not saying anything. I'm not going to say it. This is where we want to go, right here. Whoosh, and then whoop. I know, Alpine. It's okay. I'm not gonna do my Patrick Wieland impression and berate everyone. It's like, why did you take profit? You know that's not gonna happen. Or however he does. How's oil? I have not really been looking at oil. And gold. Man, this gold play, the last 2 days, this gold play off VWAP has been very consistent. Right here again. I need to start watching it a little bit more. All right, are we gonna? Yeah, Patrick is something else. He cracks me up. Honestly, like, it never fails. Like, when you tune in, like, he's berating someone. Like, he's just going off on someone. Like, it's makes me tired sometimes. Oh, I wasn't even watching. Yeah, I know Alpine. Like he thing with Patrick is like he will show his P&L. Here's the problem. Here's what I think he does, and maybe I shouldn't even say this, but it appears to me that he has multiple different accounts that he takes trades from both sides, and then he shows the profit and loss from the one that wins. Because you never see the consistent entry exits. It's always he's switching screens and then magically all of a sudden he's been in a trade for 10 minutes and he's up 20 ticks. And the only time he'll show his entries and exits is if it isn't a live trade. Like when he's just trading but not streaming it, he will basically, he's recording it on his screen and then he'll upload it to his YouTube channel and he'll class it as a live trade. But technically it wasn't on his live stream. He traded it and then he recorded it and then he uploaded it. So there's a difference. That is, to me, that it's not a live trade. But whatever. To each his own. All right, here we go. Here we go. Oh, I need a water. Not much happening so far. The golden continuation trade. No, it's not Alpine, but I'm interested. Do they have a YouTube channel? Hey, Apex Futures Trader. Yeah, he is speaking now. Supposedly. Actually, I should just watch him. Maybe we'll just watch him together. Man, this is hard now because I don't even, like, even if I have a good setup, I don't know that I want to take a trade during this time. Garcia, sorry, you can't post a link in my chat. I need to check my settings. Maybe I can change that, but I'll just pull it up. I'll find it. Hang on. Now we need a little more volume.
He didn't really want to pause and resume tightening. That was, and
all right, is that too distracting?
They didn't want to
Actually, now I have it on my wrong screen.
Now it's sort of like a different conversation.
Yeah, emphasizing flexibility.
Hang on,
and some other central banks around the world.
Yeah, which you brought up.
I'm a rookie
if they're
on
going to
this,
be data
so.
dependent, they have to be flexible. I think the problem with Steve being data dependent is you don't exactly know what the Fed's reaction function is.
No, that's definitely true. And the other thing is, you can't sort of plan and say, well, I'm going to put into my model another bank going down or something like that.
I don't know. Maybe this isn't even legal.
Kind of like where they were, a slight increase on the drawdowns at the.
All right, we'll just block my code for now.
Fund. I talked to a bunch of bankers this week in Washington. They seem like, you know, they have issues.
Can you guys hear that okay?
They didn't seem like they were in kind of crisis mode right now. And I think that's the kind of feedback the Fed is getting, that is at least opening the door to the possibility. Look, there's obviously some more data to come. But I'm going to say this, Sarah, we're about 33% probability of a rate hike in June. It's been as high as 40% this morning. Yields, as you know,
is that good for you guys? You want to watch it like this?
Report to this market pricing in another rate hike. That's where I think we are
that
right
way
now.
You can watch me and the market
if
and
the
this
market gave it to them. And I think that's something
show
that could be shaped by what we hear today from
perfect.
Powell.
We'll leave it just like
could be
that.
Shaped by Fed speakers.
You're not getting an echo on the on him speaking, are you?
That is, given some of the hopes that the Doves have, at least about base effects on this coming round of prints.
You know, Carl, who's been right about the economy? Send me that report that I haven't seen yet. But I was just, giving a speech the other night, and I was chronicling.
Okay, now it seems like we might be moving a little bit.
Been during the pandemic.
But did Powell just accidentally touch his nose?
Potential TX on ES.
Let's watch for these. Let's watch for the signals.
The one we've been waiting for and hasn't come.
Is he speaking and they're just speaking over him?
Keeps being pushed ahead. I think the story, Carl, until further notice, is that inflation is going to be resilient and surprise to the upside until we get some firm, and to use the Fed's term, convincing evidence that that is not the case. I know
potential
we got the base effects
TX on
coming
ES.
up, and I'd actually be really happy to eat my words when that happens, Carl. But right now, you want to bet on higher inflation that's moving, it's coming down more slowly than planned. I think you make money that way rather than the other way.
Well, and also that's where the Fed is, and that where Steve is there. I'm leaning toward we're not going to be satisfied. We messed this up once before, thinking it was transitory. Sure. We're not going to back out early on the early signs that inflation is coming down. Mike, what's interesting about the stock market is it's been very resilient. The fact that we've seen this big move up in yields, and it has been, especially in the 2-year,
Thomas Wade, his YouTube channel, I watched a lot of
Yes.
That used to not be the
I watch a
case.
lot of
Right.
Thomas
for a
Wade
year, it wasn't
with
the case. Last year,
price
there was a
action
pretty
trading
lockstep
and
relationship
just like
between
getting kind of the
treasuries
concept
and
of it,
long-term
but then I made
treasuries
my
and
own
the Nasdaq
tweaks.
100. But you also had earnings
Kinda
estimates
have my
getting
own,
slashed. Now they're perking up again. So there's a
way of
different
trading it, I
storyline,
guess.
a different source of energy in the Nasdaq stocks besides just the valuation compression that's based on yields. But I agree. At some point, the market might notice that the yields have moved into a different range, and maybe we have to reprice the Fed. I do think, though, the premise of SVB and everything that came after it got you a more dovish Fed than we would otherwise have had. The question is, how much more dovish, and what's the cost to the economy?
Yeah, I'm
for
wondering. So
that
they talk over
more
him.
Rapid pause. We don't know the answer to that. Remember, 3 months ago we were talking about 6%
Good one,
terminal Fed funds
Alpine.
rate because we got that hot January number. We're still not there.
Yeah.
We're not back there.
Right. I mean, we looking back at
Or
January.
see,
we
it's
sort of
on
make fun of those numbers,
feed.
Yes.
right?
Wait, are
A
you,
little
it's on the
bit.
Fed
And I
channel?
do think it also
Okay,
gives you pause
do
about
you guys
what the
want me to go
predictive
just
value
where we're
of looking
only
at things like the
listening
two-year
to
note
Powell?
yield? Because it has been absolutely all over the map.
And sorry,
moving
Garcia, I
much
can't
more
see the
quickly
link.
than it probably should, based
yeah.
on how slow the economy and inflation moves.
Which is why it's important that the KRE, the regional banks index, has moved up this week. It showed signs of stabilization.
Exactly.
We know the
I don't
Fed
know
has
what
been watching that, and everybody's
to look
watching that
at.
to figure out what kind of panic is still, I guess, in the system. It's better, although there's evidence that there's still stresses and that the credit squeeze is happening.
Right. It's
And
just
we
a
know the Fed
question
is
of,
watching that.
people are confident to be able to play that through for effect on GDP and therefore inflation. Steve's point about nobody's been able to
Okay,
predict the
where do I
economy,
go?
correct?
Tell
But
me, like,
inflation
the
has been
website
coming
to
in
go
pretty
to,
close
or do I just
forecast.
need to pick a different
The inflation
channel?
surprise index is like at 0, which means that we nailed it in the last.
Hang on, maybe we can find it. Yikes, you guys are gonna see all the shows that I record. This is so embarrassing. Just kidding. I don't watch a whole lot, but where? I'm on Fubu. Oh, it's just on YouTube? Oh, okay. Keep it simple.
Potential TX on GC. Potential TX on CL. Potential TX on ES. Trapped orders with exhaustion box on CL.
All right, I think we have it. Here, we can make it a little bit bigger. Okay, you don't have sound. Okay.
Fed and the FDIC to provide liquidity.
There we go. All right, thanks guys. I'm a little bit slow.
Trapped orders with exhaustion box on ES.
Okay, I wish my alerts weren't audible. Okay, we're kind of following my move here. Wait, you guys can't hear?
Which are very different assets in kind.
What?
That was associated with subprime mortgages. And
I'm not
secondly,
having
as the
issues with
economy
this.
declines, if it does decline, U.S. Treasuries actually become more valuable rather than less valuable, and so there's kind of a counter-cyclical effect. See, overall, borrowers are in much better shape, than they were in these previous episodes, and that makes a big difference, both in terms of the stability of the banks and also in terms of the impact on consumer spending and the economy in general.
Well, I guess a major reason that situation didn't get worse, and I think the contagion was very much contained, were the forceful actions, Jay, that you and the Federal Reserve took through the use of your liquidity tools, including the creation of the Bank Term Funding Program. However, in deploying these liquidity tools, that has come at, against this backdrop where the preeminent monetary policy concern is high inflation. And that's, of course, a little different from some of the earlier episodes, and has raised renewed discussions about the so-called separation principle, right? And so I wanted to ask you how you think about the use of financial stability tools and liquidity tools as opposed to more traditional monetary policy tools and how they fit together.
It's an interesting question, but I want to start by saying, though, that the overall, the banks and the banking system are strong and resilient and well positioned to deal with the challenges they may face now or in the future. So, as you pointed out, we do have separate tools, monetary policy to achieve our macroeconomic objectives, liquidity, supervisory, and regulatory tools to address financial stability issues. But I see an important distinction between separation. This is the separation principle.
Hopefully that's a little bit better.
Independence. Our
That
tools
way
can
I
have
can
separate
hear.
objectives, but
Is
their
this,
effects
how's
are
the
often
sound?
not entirely independent. So the tools are complementary almost all of the time because financial and macroeconomic stability are so deeply intertwined. In fact, our consensus statement
Hey,
notes that
Faust,
sustainably
that's
achieving
awesome.
maximum employment and price stability depends on a stable
Well,
financial
yeah,
system.
wait a couple days now
So
so
because
you
they're
can.
so intertwined, to me, there is not likely to be an absolute
Awesome,
and complete
Faust. Good
separation
luck.
of the
Good luck.
tools, nor is that possible or desirable. And I think as Ben's research and the global financial crisis demonstrated, financial stability affects macroeconomic stability and vice versa. We saw that clearly at the outset of the pandemic. As a result,
All right,
the tools that we use to address concerns in either arena can and will affect both, especially during extreme circumstances. That said, yes, the tools are separate, they have individual purposes, and most of the time each can be used for its intended purpose without compromising the other.
Okay, let's watch for these signs. If he touches his nose, will the market go up or
we used our
down?
liquidity tools, discount window in the Bank Term Funding Program,
He's
to make
giving
liquidity
signals.
available to banks that might need it.
We just need to pick
And
up
that
on him.
liquidity supported the stability of the financial system without restricting the use of our monetary policy tools to promote price stability. While the financial stability tools help to calm conditions in the banking sector, developments there, on the other hand, are contributing to tighter credit conditions and are likely to weigh on economic growth, hiring, and inflation. So as a result, our policy rate may not need to rise as much as it would have otherwise to achieve our goals. Of course, the extent of that is highly uncertain. So,
Yeah, thank you. And of course, I think the effectiveness of those tools is reflected in the fact that the FOMC has actually raised interest rates twice since the emergence of the banking strains. Of course, and the purpose of that is to confront the inflation issue, which brings us to our next topic, which is in fact inflation. In the pandemic and the aftermath, we've had many renewed discussions of the important and classic textbook distinction between supply shocks and demand shocks, and in particular the particular challenges that a supply shock can present to a central bank. And that's also raised a lot of questions in academia and in policy circles as to whether or not the inflation process post-pandemic is going to look quite different than prior. Jay, maybe we can start with you. A number of folks have argued that we are entering a new period where supply shocks will be more frequent. Would love to hear your views on whether you think that's a possibility and what that might mean for central banks.
So it's a great question, and it's one I think we'll be dealing with for quite a long time. And I'd say it's certainly possible that we'll see continued supply shocks. I also think it's just very hard to forecast that with any confidence. As Yogi Berra is thought to have said, Ben, you're the baseball expert, you can confirm or deny
Wow.
this, but it is difficult to
He
make
must have
predictions,
touched his nose,
especially
or
about the
maybe he
future.
tapped his foot 3 times.
So I think that the best we can do at
missed
this
it.
stage
What
is
happened?
probably to just identify the factors that we think can lead to further
Shorted 1 mini.
negative supply
Okay,
shocks.
good luck.
I will say that, though,
Good
that
luck.
positive
218.
supply shocks related to globalization largely probably contributed significantly to the period of low inflation that either ended or was interrupted by the onset of the pandemic. And
How I
I'm
like the
thinking there
Apex
of
indicators,
the
Jamal.
vast increase in global labor supply.
Okay,
development of
I use them.
efficient global
Like, they
supply
definitely
chains,
help. I don't
facilitated by
trade it the way that
technological
they
advances and
say
things like
to.
that. And I would say those positive supply shocks
So
do not seem likely to be
it's
repeated.
yeah. So but I
At
do
the same
use
time,
it.
the
I
drivers
find
of the
value
current
in it with
inflationary surge certainly
the
included a
trapped
sequence of
orders and
large
everything
negative
like they
supply
teach.
shocks
So
to the global supply chain for goods,
I kind of use
which
it
also experienced a
to
large and persistent
verify
shift in
or
demand from services
my
and
entries.
goods to goods, and also the supply of workers. On top of that, Russia's war against Ukraine brought further shocks to global supply chains, particularly supplies of energy and non-energy commodities. So we can't know how persistent those shocks will be or whether further negative supply shocks will come along. Will globalization be partially or fully halted or reversed? Will it resume again as the pandemic mercifully recedes into memory? We can't really know that now. But for policymakers, the bottom line is that central banks will continue to be responsible for providing price stability, and that will require us to navigate whatever additional supply shocks do occur. So as Tomas and Ben and their co-authors wrote in the inflation targeting book, what a central bank can do is control inflation. And that is true over time, even in the presence of supply shocks, should they come.
Ben, would love to hear your views on this.
So unusual events which disrupt normal economic functioning often are followed by inflation. Examples are World War I, World War II, the Korean War, and now the pandemic. And the pandemic just makes it harder for policymakers to understand what's happening and to react
Yeah, we're just
appropriately. In particular,
shopping
the
right
pandemic
now.
Scrambled the labor market, made it harder to judge the state of the labor market. The opening led to a very
Now we're
extended
selling off
rise
a little
in
bit
commodity
more.
prices, which was difficult.
They must
to deal
not
with.
like
We
when
had
he
supply
talks.
chain issues, which was pretty much a new thing, which was also a contributor to inflation. So there are many features of the pandemic that made this an unusual episode and a difficult episode to address. That being said, I think that, and I've done some research on this with Olivier Blanchard that we're presenting next week, the basic mechanisms, I think, are still the same. But you have a bunch of bad shocks, that's going to give you a problem. But the underlying mechanisms of supply shocks and tight labor markets and so on are really the same. So I think, I don't think there's been a major change in the underlying process that generates inflation, only a series of shocks related to the pandemic that gave us this episode. Going forward, I agree with Jay that we can't predict, what new shocks will come. We've got new technologies out there that might, make big changes in our economy. We've got, green investment, things like that might affect the price and availability of fossil fuels. And so there are many, many things that we can't predict. But I think that broadly speaking that the inflation process has not changed, and it's one aspect of that, which is very good news, is that the Federal Reserve's credibility has helped keep inflation expectations, particularly longer-term inflation expectations, reasonably
this is
well
where it
anchored,
gets
which is
crazy.
always sort of the first step in getting control of inflation.
You mentioned the role of the labor market tightness in the inflation process. I think it's quite striking that right on the eve of the pandemic, the unemployment rate was around 3.5%, a 5-decade low. Yet at the same time, inflation was kind of struggling to get up to 2% on a sustained basis. Here we are in 2023. The unemployment rate is roughly at the same level as it was prior to the pandemic, but of course inflation is far above 2%.
All right, are we gonna?
So in that context, should we be
I don't know what to
thinking about
expect.
the relationship?
I don't really feel
between
like they're gonna say
slack in the
much
labor market and
of
inflation differently?
really that
Do we not have the right
newsworthy.
measures of slack? Is it the problems with
The best
understanding what
move
the
will
natural rate
probably
of unemployment
happen when
is?
they stop talking.
Or is that really, or is slack
Once
really
they
not
get
key
off,
to
then
understanding
the market
inflation
will
in
kind
the
of
first
absorb
place?
everything, and
Ben, you
it's
wanna take
gonna.
that first?
as I was
Pick a direction
talking about
and then
before,
run.
I think that the pandemic, to some extent, scrambled the usual signals from the labor market. And the Federal Reserve over time has begun to put more weight on things like the vacancy to unemployment ratio, which seems to give a better signal in a period of change when the labor market matching process is in change than the unemployment rate. So there has been some scrambling of those signals. That being said, it's simply not true that, even in people who've understood since the 70s that there's not a simple inverse relationship between inflation and unemployment. In particular, what can break that relationship is supply shocks. And so during the 70s, we didn't particularly have tight labor markets most of the time. We had high inflation, A, because we had oil price shocks, which the Fed did not respond to adequately. B, because inflation expectations were not well anchored.
Fed did not respond to
adequately. And there was a
adequately.
strong tendency for
Interesting.
price increases to feed into wage increases to feed into price increases. So because
Yeah,
of
I
the
know,
presence of
Garcia. That's
supply
why I'd rather
shocks
wait.
and
I'd rather just wait
inflation
through this
expectations
kinda
dynamics,
chop
there's no
fest.
reason why low unemployment
still
and high
hoping.
inflation can't coexist.
I mean, right now, my line that I drew is kind of holding up,
depending on the situation, might be somewhat
at
different.
least relatively.
Jay, how are you thinking about that?
So I'm very much in agreement with that. It's certainly true that we had both before and after the pandemic unemployment very low, close to 3.5%, but that we only had high inflation after the pandemic. Does that mean that our understanding of the relationship between slack and inflation is badly wrong, or that it has changed fundamentally after the pandemic? And my answer would be tentatively no to both of those questions. I think what really is different this time was the series of unexpected and persistent supply shocks that featured in the inflation process. I don't think labor market slack was a particularly important feature of inflation when it first spiked in spring of 2021. By contrast, I do think that labor market slack is likely to be an increasingly important factor in inflation going forward. In particular, inflation in non-housing services is showing signs of real persistent. In this highly diverse sector, labor costs are a high proportion of total costs, and that sector happens to account for more than half of the core PCE index. But all of this, the point is, all of this can be explained, I think, using our standard framework for understanding labor market slack. You could say it this way, that the natural rate of employment probably rose sharply as the pandemic severely disrupted the labor market. And the implication of that would be that an unemployment rate of, say, 4% indicated a much tighter labor market in 2021 than it did in 2018. And as Ben mentioned, of course, after the pandemic, we began looking at much more closely at alternative measures, particularly vacancies, but also quits, which have been signaling even greater tightness than the unemployment rate alone might have thought to have been to signal. I mean, to put some numbers on it, we at the end of 2018 and the end of 2021, we had 4% roughly unemployment in both
Here's
cases.
part of the problem
In
for today. I
2018,
have
the
to.
vacancies to unemployment ratio.
I have
was 1-to-1
an
essentially.
appointment.
In 2021, it was
I need
2-to-1.
to leave
And that was
here
a
at
much
2
better
o'clock.
indicator, obviously, at that time of the simple
So
standalone
I need the market
unemployment
to.
rate.
I
Although,
need.
as I mentioned,
How long
you
are
could
they
also think
supposed
of
to
it
talk?
as the natural
Does anyone
rate being
know?
highly elevated. The other thing is, it may also be the case that the Phillips curve has steepened, meaning that inflation has returned
What
at
does it
least for
say
now
here?
to being more responsive to changes in the labor market slack. But the Phillips curve.
I think they're just going to keep
was
yapping.
once thought to be fairly steep after flattening. Relationships in the economy, like the Phillips curve, evolve over time, so I would not characterize that as a problem for our understanding of inflation.
Very good, thank you. Maybe we can pivot here to the topic of central bank communications. It's widely understood now that the better the public understands the conduct of monetary policy, the more effective it will be. But fostering that type of understanding really requires a lot of communications, and of course that can be hard. Both of you have been powerful advocates for advancing monetary policy communications, both with an eye toward making policy more effective, but also for the purposes of promoting transparency and accountability. Ben, you've obviously played a critical role here, advancing the FOMC's communications, including the introduction of press conferences after FOMC meetings, the introduction of the Summary of Economic Projections. So what changes over this period since the communication, say, revolution began, would you highlight as being some of the most effective, most important, and where do some remaining challenges exist?
Well, let me talk about communication, because I think you need to understand that it serves multiple purposes. I mean, one of its purposes, the narrow purpose, is to try to align market expectations with the Fed's own thinking. I think that goes back to Alan Greenspan. If you go back to 1994, the first FOMC statement, I mean, since then, the Fed has tried at least to give some indication of what it's thinking and what it sees as the risks to the economy. But beyond that, you mentioned transparency and accountability. This is a powerful institution. It's very important that it be accountable to the Congress and to the public. And the best way to do that is explain what we think, what we're doing, and how we're going to go about that.
When did that happen? 11/11.
There's other reasons for communication. One I would talk about is feedback.
They know something we don't.
We're having a conference here. If the Fed puts out the issues that it's concerned
about,
about,
sell off here a little bit more.
Economists will write articles or tweet and respond to that.
This guy thinks he's funny.
Or in the case of the Fed Listens program, maybe it would be more ordinary people who are explaining, how monetary policy affects them. One final thing I would mention
nice trade there, Martin.
Is diversity of views. Because the Fed has a consensus culture, and there are very few dissents normally, the outside perception is the Fed is subject to groupthink, which of course is possible, but with people talking about their own views and explaining why they see the economy as they do, it does, I think, at least to some extent, show that there is a range of opinion on the committee. In terms of tools, I guess I do feel proud about the press conferences, which I introduced 4 times a year after the Summary of Economic Projections, in which Chair Powell has taken to an art form. I think also, just the inflation target, the forecasts that we release, and there's a cultural change, which some people don't like, but I think on net is good, which is, it used to be, if you look back at speeches in the Greenspan era, the president of the Federal Reserve Bank of Minneapolis, would talk about, harvests or something, wouldn't talk very much about the global or national economy. Now you have a lot of people talking about, the different aspects of the Federal Reserve's views. And again, that contributes to both market transparency and also to accountability to the local constituency and to the national constituency.
Jay, you of course have continued to push forward on the communications and transparency fronts. Welcome your thoughts.
I think the broader setting is that transparency is especially important today. Polling data show that many important public and private institutions globally have struggled to retain the public's trust.
I'm not going to say that. I'm not going to say much,
an
but
institution that serves a critical
this line is still in play.
To be here and work here is to know
this line I'm not ever going to remove. We're going to see how long it's going to take us to
for most people. And on top of that, we have a critical
eliminate that line
of independence. And all of that, to me, means that we have a special obligation to explain ourselves clearly, what we do, why we do it, to provide transparency to the public and their elected representatives in Congress so that we can earn and deserve their trust and support. And that's a critical task if we are going to sustain our democratic legitimacy through this
slowly selling
interesting
off
period. My colleagues and I really take that as a primary and affirmative, proactive obligation and not something we see as a burden or of second-order importance. So in that spirit, to your point, we have followed the example of Chairman Greenspan beginning in 1994 with the first post-meeting statement, through Ben's innovations and Janet as well, in looking to foster greater transparency and accountability. And a couple of examples, we now do a press conference after every meeting, not just every other one. We have greatly expanded our congressional outreach to be certain that we hear directly from lawmakers on an ongoing basis, so that they have the information they need to conduct appropriate oversight. As I mentioned, in 2019 and 20, we conducted a public review of our monetary policy framework, seeking input from a broad range of people and groups all around the country. We've also significantly expanded transparency beyond monetary policy. For example, we now publish semi-annual financial stability and supervision and regulation reports. Of course, there are always communication challenges, especially I find about communicating the uncertainty that attends our assessments of economic conditions and the outlook. The good example of this is, despite our persistent efforts to explain otherwise, the policy paths from the SEP seem regularly to be taken as a firm plan or a committee decision, rather than what they are, which is a compilation of individual participants' best assessments on a particular day of appropriate policy under the assumption that conditions evolve in line with their baseline forecasts. So that's just a challenge that we constantly face in the context of great uncertainty. Despite that, I would say, though, that the summary of economic projections has actually been very useful during this tightening cycle, as markets have looked ahead and priced in future rate hikes, long before they're actually implemented.
Your last point really brings up the idea of communications as being an effective policy tool. And I guess the key element of that is the use of forward guidance. Jay, in one school of thought, forward guidance is a tool that should really only be deployed when interest rates are at the effective lower bound. And so you can no longer provide accommodation by lowering rates further, and so you do so through.
All right, this sell-off continues. We're at below 4,200 now.
Forward guidance should be just a regular part of communicating with the public to convey the committee's policy intentions.
This is kind of an important level right here, 41.98.
Where do you come out in that debate?
Well, I do think it depends on the circumstances.
During
I do
news
think that,
events like this,
forward guidance can
I don't
be
pay
useful
as
when
much
policymakers
attention
have a
on these
materially
levels and
different
stuff.
or clearer view of the likely
to
path
me,
of policy
they
than
don't.
does the interested public. I would agree at the effective
They don't
lower
hold as
bound
much
when
water.
we need to provide more stimulus by indicating
micros,
intent to
awesome.
keep policy accommodative longer than the public
Awesome.
expects. There's a use case
futures.
there. I also would say, though, that communication comes with a cost of misinterpretation, and it also may limit flexibility. So I think we should use forward guidance sparingly when the course of policy is either reasonably well understood or, on the contrary, is
this gold
dependent on
is
uncertain
getting
future developments that little really can be said constructively about the future. And a good example of that
gold
was
is where
the
I'm
March 2020 FOMC meeting. The pandemic
tempted to
shutdowns were just beginning.
wait on a little bit of a
Level
pullback
certainty
to
was
enter
almost
again, but
unimaginable, and we chose not to issue an SEP.
Still
at that
such a
point.
big
Really,
news
our view
event
was
that
that
I'm not
releasing
sure.
a forecast at that time
If I
might have
do,
been
I'll
more
go
of an
with
obstacle
one
to clear
contract
communication
only.
than a help. In contrast, as I mentioned a minute ago, forward guidance has really been a useful and effective tool during the current tightening cycle, as financial conditions have tightened well in advance of actual rate increases. The 2-year tightened between the September 21 meeting and liftoff in March of 20. It tightened by 200 basis points before we ever actually lifted rates, and that's significantly because of our communication. So in the current context, until recently, it's been relatively clear that further policy firming would be warranted, and our forward guidance has said so. Now, however, we've come a long way in policy tightening, and the stance of policy is restrictive, and we face uncertainty about the lagged effects of our tightening so far and about the extent of credit tightening from recent banking stresses. So today, our guidance is limited to identifying the factors we'll be monitoring as we assess the extent to which additional policy firming may be appropriate to return inflation to 2% over time. As I noted at the last press conference, that assessment will be an ongoing one as we move ahead, meeting by meeting. Having come this far, we can afford to look at the data and the evolving outlook and make careful assessments.
Thank you. Jay, you mentioned that guidance can be useful at times when the public may expect a very different policy path than policymakers. How do you think about those sorts of situations?
You're right. So recently it has sometimes been the case that markets appear to be pricing in a different rate path than the committee expects will be appropriate. But I would say that disconnect does not seem to reflect a misunderstanding of our reaction function or a lack of belief that we'll do what's necessary to bring inflation down. Rather, it appears to reflect simply a different forecast, one in which inflation comes down much more quickly than the committee participants think is most likely, perhaps due to a significant downturn. I would say also, so far the data have continued to support the committee's view that bringing inflation down will take some time. Moreover, something we often don't remember to think about is that market prices always reflect both expectations and compensation for risk.
And I was
and
muted.
what market participants say in surveys of their expectations
Blah,
is
blah,
actually
blah,
closer
blah,
to the
blah,
views in the SEP than what is reflected.
That's
in
pretty
market
much what I
pricing.
hear, Martin.
So ultimately, my colleagues and I have our forecasts, and market participants have theirs. Our role is not to
You mentioned
advocate for our
significant
forecast.
downturn.
What we can do is be clear about our expectations for growth, unemployment, and inflation, and the likely implications for policy.
Oh man, I'm thinking about
we want
entering
the public
here,
to
but
understand how policy would react if the path of the economy
There
were
we
to
go,
differ
selling off
materially
again.
from our expectations. And of course, we do lay out.
doesn't feel like the
forecasts
market
quarterly.
is that happy with this now.
Then what would your
that
takeaways be
means,
for
I don't
the
know.
past couple of decades' use of forward guidance as a policy tool?
Well, Charlie Evans and co-authors have made a useful distinction between what they call Odyssean and Delphic forward guidance. So Odyssean forward guidance is a commitment forward guidance, which is rarely used, but typically at the lower bound, where the central bank promises to do something, and its credibility on the line, that it will follow a certain path going forward, and that's a way of getting more stimulus. And I think, again, that goes back, again, to Alan Greenspan, I think, to indicate that a certain path was very likely, and that actually helps achieve the objectives. Delphic forward guidance is basically just a forecast. Here's what we think. Tomorrow we might think something different, but we're just trying to, as part of our transparency, we're just trying to give you a sense of where the economy's going and how we think policy will react. Now, as Jay
I mean,
points
honestly,
out,
the
there-
next
there are some
level are
problems
like,
in practice.
I would be
One is people don't
like
understand
4190.
the difference all the time between a commitment
Kinda the next
and a
level.
forecast. That's something that Jay has emphasized, and I think
But the biggest level would
should
be 4180.
emphasized. Another
Like
is
4180.
people, underestimate the amount
If
of
we really
uncertainty
sell
involved,
off,
which is
4180.
enormous. So I don't think you can do without some form of forward guidance.
But here we
because
go. We are
the idea of
tanking,
transparency
boys.
says, here's what we see.
It's a sell-off.
And here's why we're thinking.
Get
And
the
so
women and
idea
kids
that
out
there's
first.
no guidance at all. Most of the time, I take March 2020 as a counterexample, but most of the time you do want to give at least a sense of where you think the economy and accordingly policy are heading. I think, just if I might
on
editorialize
NQ.
one more minute, I think one of the issues is that
Actually
the
not
FOMC
quite
is so
as
large
much-
and
not
geographically
as big of a
dispersed that it's been
sell-off on
difficult to come
NQ
up
as
with a
ES.
collective committee forecast. We tried to do that when I was chair. The dot plot is a compromise, which is
This
not ideal.
blue line
Other
strategy is
central
still
banks
holding
do
up,
other
by the
things.
way.
Sometimes they have collective committee forecasts that are voted on, or they use market rates, or they publish the staff forecast. So there are different ways to go about this. But again, I think that forward guidance is both an instrumental tool, but again, letting people know sort of how the central bank sees the evolving situation, even if there's lots
Very
of
nice,
uncertainty,
Apex.
which you can say,
Very nice.
normally is part of transparency.
Thought about entering
So
right
highlighting
here. It's just,
uncertainty,
I don't
as
know.
being a key factor
During
in
these Fed
dealing with
talks,
some
I
of
don't
these
like
issues.
trading it.
Obviously, uncertainty is a pervasive feature of monetary policy making, and often invokes, the so-called risk management approach to making monetary policy. Maybe we can start, Jay, with you on this topic. The FOMC's raised the federal funds rate by 5 percentage points in a little more than a year. That's a very rapid pace by historical standards, as we all know. How do you view those actions in the context of the uncertainties that you and the committee faced about the economic outlook, and how did risk management considerations factor into your decisions?
So I'll start by remembering that Alan Greenspan famously said that pervasive uncertainty was the defining characteristic of the policy landscape. It's worth remembering that he made that comment during what we now think of as the Great Moderation. So that statement has never been more apt than it is today. If you look back, the pandemic,
He made
the
people
global
laugh,
shutdown,
guys.
the
Market
historically
should be ripping
forceful
up here.
response and the reopening, all of that had no modern precedent. So it has been a time of historically elevated uncertainty and of unexpected outcomes. No advanced economy had ever faced a shutdown and a reopening, and now all of them would face it at the same time. So no matter what happened, the outcome was going to be unprecedented. So this level of uncertainty posed real challenges for policy and policy communications. On the one hand, we had to be nimble to be able to respond to the evolving situation. On the other hand, we wanted to be as clear as possible about what we were doing, lest we add to uncertainty. So I would say policy certainly has been nimble. consistent with what within our expectations. The data did actually show declining inflation through September of 2021, but then
I still wouldn't be
decisively
surprised at
against
all
that
if we rip
expectations
higher
thereafter.
here.
And we,
Like,
in response, we accelerated our policy firming.
this is definitely a pretty nice
ultimately, as you
extended
noted, raising rates
pullback,
by
but
500 basis points in just over a year. Over this period, we
This is
communicated that the object was to reach a stance of
interesting
policy
level here.
that is sufficiently restrictive to return inflation to 2% over time. But we also communicated that the level of rates that would ultimately be required was highly uncertain. Now, until very recently, it's been clear that further policy firming would be required. As policy has become more restricted, the risks of doing too much versus doing too little are becoming more balanced.
All right,
and our policy
if we
has
come
adjusted to
down,
reflect that fact. So we haven't made any decisions about the extent to which
if we come down and fail to make new lows on this
given how
move,
far we've come, as I noted, we can afford to look at the data
then
and the evolving outlook and make careful assessments.
I might
Ben, when you
basically
became a
go with one
policymaker,
micro
you were well versed in
for
sort
a
of the
long
academic
here.
literature on
Yeah, I
decision
moved
making
from
under
that side to this
uncertainty.
side.
I like it to pull back like to
I
here,
think
but if
uncertainty
it
when you're an
fails to
academic
make a
is
double
trying to
bottom
decide
and
whether
then
your error
we,
term is Gaussian or not.
price action, it's going, make it
in
move
actual
back up
policy
again.
making, you don't even know what the current quarter GDP
Yeah.
is.
Actually, that's a
because it's
good
going to get
point,
revised
Apex.
several times down the road. I remember
Kinda
when I
curious.
was
Let's see
sitting
what that
on
is.
just as a member of the board, and Greenspan was in the chair, and we had responded to some
From here to
inflation data,
here.
and a little bit later, it turned out that
A little
that
bit past,
inflation
we're at the
change had been
61%
revised away.
pullback.
And I asked the chair, do you think we can revise our interest rate policy? It is very difficult. I mean,
They're making
gotta
people
laugh
laugh
at
here.
that, but you know, just trying to make policy, it involves not just uncertainty about, you know, the data, about the model, about all the things that can happen, about the social and economic and political environment.
Order submitted.
So it's very difficult, and
right, if
unfortunately,
we
or
move-
fortunately, given that monetary policy works with a lag,
I'm going to be watching
given that
here,
there are
but
risks on both sides of the modal forecast,
Thinking about
there's not
entering
much
here just on
choice
along,
but
but
just to
want to see it
accept
get
that
above
uncertainty
this
and try
level,
and,
maybe
you know,
even
do the
above
best you
this to
can,
be safe.
being ready to adjust as new information arrives.
And then I'm going to have a pretty wide stop
Very
loss
good.
on that.
Thank you. We are getting close to the end of our allotted time. Maybe we could wrap up with just a question looking ahead. Jay, maybe we can start with you. What would you point to as some of the key issues that will be most relevant to the research community as well as to the policymaking community?
So I guess I would start with the labor market and, you know, what we talked about earlier of
Eamon? No, it doesn't
vacancies
matter.
in particular and the beverage curve and the whole discussion over
Nope, they do
whether,
not, does not matter at all.
the extraordinarily high level
right.
of surplus demand in the labor
This is-
market can be lessened through the vacancies channel
Not sure
without
what to
a
think of
significant
this.
increase in unemployment.
All right,
That
Order
may be
filled.
akin to what has happened in all prior cycles or most prior cycles. So that's going to be a question that we will resolve empirically. But I think we're learning new things about the workings of the labor market, at least in this one situation. I think on monetary policy, it's going to be interesting to look back and try to understand how
Keep my
inflation
stop kinda
spread
tight here.
from what was very, at the beginning, very focused on the goods sector due to the rotation of demand from services to goods and the tremendous amount of support that goods purchases got from fiscal and monetary stimulus.
Trying to
How did it
determine just,
spread
okay,
then
if I'm
through,
wrong or if this starts
really into
reversing.
the service sector where it now significantly resides. I think we're seeing much progress on goods and we have progress in the pipeline on housing services, but where we see persistent inflation is now in the service sector. So what is the mechanism by which that happens and what are the implications?
Ben, you have the last word.
Well, I think one of the things that I would urge researchers to look at is the relationship between monetary policy and financial stability. Very, very difficult
Hey, no problem.
relationship.
I mean,
if you read the
No
papers, you see
problem.
that everybody has a very strong opinion about this subject, but they don't necessarily correlate. As Mark Twain once
All right,
said,
I'm gonna-
the things you don't know can hurt you as much as the things that you know for sure but ain't so. You know, I think that we really do
Target
not
filled.
understand
Order filled.
to the extent
get
that we
out
need
there,
to,
go with a little bit
the
of a
relationship between
small
different
win to
aspects of monetary
start out the day. That was basically a
risk-taking,
momentum trade.
balance sheet behavior, et cetera.
and just capturing
it's
some
just something-
profit.
there's
Now,
a lot of good work being done. Don't get me
we
wrong.
pull back, we
but,
fail to make new
I
lows
think we need to
or
understand
new
much
lows
better,
again, then I want to
you know,
enter
what
again.
what the channels are and to quantify the relationships so that we can think about to what extent we need to take that into account
Hey, Aqua.
in monetary policy.
Very good. Well, let me thank both of you tremendously for sharing your perspectives with us today.
Right now, I'd like this to pull back a little bit again, and I'd like to re-enter.
So thank you very much. Round of applause.
Yay, good job, guys. Good job. So is that it? Oh man, if I wish. Oh man, now I. Session 2 at 1 o'clock. Okay. Wish I would have known that it was ending that soon. I might have stayed in the trade. Might have. Anyway. All right. Want to get another pullback? See if we can get another entry. They're preparing the soup. Yeah, it's still like that unknown. Are we going to... It could go either way right here, honestly. This could be a bull trap, or this was a bear trap. So, right now, me personally, I think we're going high. I think we're going higher. I'm hoping for a little bit more of a pullback here so I can enter again. But I want to be careful because now that they're done speaking, usually this is where the big money comes in and it's going to start moving up, or like it's going to be the determining factor. All right, here's the pullback. Man, I missed.
Order submitted.
Want to see it get above this. Honestly, not seeing as much volume as I thought. I thought we'd see a little more volume. Not a whole lot. Yeah, that moved a little bit shady now.
Order canceled.
Sorry, guys, that's way too loud. Forgot that I had turned up my volume. You thought that was your order? That's hilarious. I should have, you know what, be a troll. Like, it would be trolling is to create an alert, and the alert be the same alert for stopped out, and then I just randomly play it. It's like the worst. It's like the worst notification that you can have. Stopped out. I hate it. Or maybe do one target filled with the ka-ching. If you take out 2K from both. I wanted to ask you about that, Alpine. So I'm curious. So are you more of the mentality, or are you entering with the mentality of you just want to get one nice payout on your account, and then if you lose the account, it's fine, you'll just try again? Or are you more the mentality of, hey, I like to get these accounts and actually like really grow them? Because you can kind of have a couple different strategies, I feel like, once you get to that point where you can request a payout. Right, I know. I mean, that's one way to look at it, Alpine, but this is not me telling you what to do, okay? So don't take it as that. But what if you would take out 2,000 on the one account, and obviously your drawdown is going to be very low, but it is what it is. But your other account, maybe you only take out 1,000, and with the thought process of, hey, let's basically trade without fear, and just play it to maybe take it to a 10K trailing balance or something where you can actually start scaling up your trading and really grow the account. But no, you do you. I'm not saying what you should do. That's a thought that I've had if we ever get to that threshold. But it's obviously different. It's different how you view it. But oh man, this was a fake out of epic proportions right here. Spike up new highs and rip right back down. That rip down, this makes me think we're going lower. That might have been a fake out right here, taking out the stops. And I don't know. That makes me very uneasy going long here. Yeah, I know Alpine. I mean, I have the same thing, and that's kind of what I was saying earlier. Maybe you weren't here. Like that mental block of, to me, the only way to get past that, to me, again, just talking about myself here, for me to get to the trader that I want to be, I need to get through this fear of losing stage. And the only way for me to do that is to push through it. And I feel like I need to push through it so that I can feel confident that I overcame it. If I always just avoid the fear and I don't confront the fear, and I just basically, it's kind of like I was saying, if someone has a fear of elevators, they're not ever going to overcome that fear by just always taking the stairs. The only way you can overcome that fear of elevators if you start taking the elevator. And, after doing it enough times, you will eventually get over that fear. But you're never going to overcome your fear if you just always take the stairs. Or that's kind of what made sense to me, where I'm like, that's right. Like, there's not a magic pill or a magic button that you can take or push that, oh, I have no fear anymore. Or like getting over that mental block. I feel like the only way to get really through it is to push through it. I don't need my heads anymore. I hate wearing those. No, not at all, Alpine. That's actually something that we talked about last. Like, that's one thing that was like that fear of failure, the fear of blowing all 20 accounts, like that fear. And it was more based on that I'm going to disappoint my wife and everyone else, even in the community, like just the little small community I have here, that fear of failure. But I had a really good talk last night with my wife, which is also my accountability partner, just kind of going through my fears and the fear of failure, where I feel like, again, I need to push through it in order to actually make myself a better trader. Am I the trader I want to be right now? No, I'm not. I'm not. And I feel like the only way I can get to where I want to get to is to push through it. Now, yeah, I asked her, I'm like, okay, what if I blow all of these accounts? Like, what then? And she was like, big deal. It's not a big deal. And again, I'm not counting on this money to pay my bills. This is not my job. So basically, if I make it to withdrawal, then it's basically a bonus. It's just a bonus that I am currently working towards. But if I blow all the accounts, then the biggest thing is that I learn something from it. But no, I'm not going to stop trading then. I'll continue. And as long as I learn, as long as I'm learning from my failure, as long as I learn something from it, then I'll continue going. Fear never goes away. I agree. It doesn't go away, but you learn to overcome it. Like, you learn, it gets less and less with time. Or again, I'm just going to use the same analogy with the elevator. If someone has a fear of elevators, and if they start going into the elevator by the thousandth time, like after going into the elevator for 1,000 times, they're going to have less fear than that first time they went in, is kind of my point. Not saying that they might not still have a small part of them that has that fear, but it's going to be way, way less. And then, you know, that's kind of what I guess my consensus on it. But no, yeah, I was kind of like, because yesterday I'm like, why do I really have a fear of losing? Why? Because if I blow these accounts, it's not going to change my life. I'm not going to be living on the street. It's obviously I don't want to, like, it's going to suck. I'm going to be disappointed, obviously, but it's not going to be the end of my life. It's fine. I mean, I'm okay with it, but it's just, yeah, it's that mental block. And I'm trying to, like, that is what I really, really need to work on, is just getting over that fear of losing. And I feel like the best way to do it, for me anyway, is to push through it. And not saying that, you know, we're always going to have emotion. We're always going to have a higher level of anxiety when we enter a trade. But if we can control it, and yeah, I guess that's what I want to do better at. It's easier said than done. I know that. The 4K won't change your life. Right. But it's the mental, like, if that is a mental block that will get you. Exactly. Like, that's a great example, Alpine. So that's a great mental block for you. And then you can basically conquer that. Like, you can kind of look at that as a victory. You can kind of look at it as, I looked fear in the face and I won. And now the next time, either maybe you do more accounts, like you said, or maybe next time you go for a 4K withdrawal, or like whatever, or go for multiple withdrawals. That, I think, is the key, that we keep progressing and we keep pushing ourselves in our trading journey to keep like, we should push ourselves to where we're uncomfortable. And I guess that's kind of where I totally understand the thought process for me, for people that are recommending that I only trade, 4 accounts or 2 accounts for now. Yeah, like you're saying, Martin. Why I need to? Because that was the goal that I had made all along. And maybe that's a bad excuse. Maybe that's a poor reason. But for me, like, I set my goals. For me, and I always make it, I guess, excuse me. Like, I set my goals for myself. I make it, again, and my goals that I set for myself was with my wife. Hey, these are the goals that we have. This is what I want to do. And she 100% supported it. And I just feel like if I change, and not that it would be a failure in any way, but mentally, I'm like, maybe this is just me being stubborn too. It could be, but I've been known to be stubborn. But I'm like, this is what I plan to do. This was my goal, and I'm going to do it. Like, it's kind of like that. Now, I haven't ruled it out. I talked about it at length last night of, okay, maybe breaking them out or not. Like, what's the pros? What's the cons? And, should I or shouldn't I? And I went back and forth, but I decided I want to keep on the journey that I'm on. And basically, I changed a couple things. Basically, what I changed was I want to be more lenient on my stops. My stops, I feel like were too tight. I need to be more lenient on my stops and really, really focus on getting over the fear of losing. That is my biggest challenge for myself, is just to get over that. Where I actually don't feel, and maybe this is me being naive. I don't think it is, but me personally, I wouldn't really feel any different if I would trade 4 accounts and blow 4 accounts than if I would blow all 20 accounts. I really wouldn't feel any different. Like the difference between that is really not a big difference to me. And it's not about the money. Like, it's not, yeah, it definitely cost a lot of, it costs a lot of money, the investment that I made. Yes, obviously, I'd prefer to get to a payout, but it's not going to change my life if I blow these 20 accounts. Obviously, I don't want to. I don't know. That's kind of my thoughts on it. Man, my throat is acting up on me this morning. And it would feel better. See, that's where my thinking is different, totally different. Because actually, I would not feel good about it. I mean, yeah, maybe a small part of me, I would feel good about getting 2 accounts. But my thing is, why not just trade? Why not just get through that and push through that mental hurdle and just trade like I did my evaluation accounts with all 19 accounts? Why not just do that? That's mentally a challenge for myself, and that is what I want to get to. No, I don't take it like that you're telling me how I should do it. I don't. I 100% appreciate people's feedback, and they want to help. They were like, hey, you should only trade 1 account or 2 accounts or 3. I don't blame you at all for feeling that way. I really don't. It's a very sound reason. But for me, obviously I need to make the decision of what I can live with. And if I would take and cut these accounts and only trade 2 of them, and then trade with the way I did my evaluations, be more free with my trades. And then I got those 2 funded status, I would be frustrated that I didn't at least try to do that strategy with all of the accounts linked. That would be my frustration. And then the other thing is it just looks like way more work. For example, if I have a good day or a bad day, obviously, but if I have a good day, it's only affecting 2 accounts or 4. Now I have to have another good day 4 more times just to get it across all my accounts. And I'm like, I don't know. Again, it's back to the real reason was that was my goal that I set for myself. And I'm not ready to give up on that goal. I'm just not. And I'm not saying that I won't. Maybe at some point, if we get in, this continues going bad, at some point I might. But no, I traded at minis. I traded too many contracts for evaluations. I traded too many contracts, and until I got my evaluations, once I got an evaluation account to 2,800 in profit or 2,900 in profit, like $100 to $200 close to my profit goal, then I would switch to 4 micros. That was my strategy with all of my evaluation accounts. But I was way more lenient, or I adapted more. I had way more kind of adapted strategies when I was trading my evaluation accounts. And yeah, it was just, if I saw, like, for example, like this morning, this move, this trade right here, this was not a pullback entry trade. And like, this is a momentum trade after a breakout here. And this is a momentum trade. So like basically just watching price action and, taking my trades based on the price action is really the trading that I would do. And I was successful with it. So it's kind of, I'm kind of at a point where why wouldn't I just keep doing what was working? I thought about that too. But we're talking, yeah, that's something I considered Alpine as well. But this price action is pretty brutal right now. See a lot of long wicks here. This could be a push up. I still think we're going to test these highs today. I still feel that way. Madam, I just stopped doing it just to minimize the risk, basically, to minimize it to get to that $3,000 threshold. Hey, Will. Hey, thanks for tuning in. Yeah, true. I've thought about that too. Doing, there's a lot of different ways you could do it. Is basically, with Copy Trader, I could make it so that if I trade a mini here, then it's trading 2 or 4 micros and do different things like that. You could do that as well. I was considering, like last night, I was considering just changing and actually going back to just trading 2 minis and trading like I did my evaluation accounts. Now, 2 mini contracts, obviously that is serious. Like, that's pretty serious. And we decided, like, I'm like, okay, I don't want to, like, I feel like that would be reckless. Especially like to start out trading basically how I'm trading my evaluation accounts. That is what I want to do. But I want to still stay with the micros and, maybe go 1 or 2 contracts with the micros, but trade like I did my evaluation accounts. So basically opening up the playbook, and we're opening up our stop loss a little bit, being a little bit more flexible on our stop loss, so we're not so rigid and tight on our stop loss, and opening our playbook. That is basically what we're doing. And just trading like I did my evaluation accounts, and then I'm going to do it on 2 micros. I mean, right now I only traded 1 micro just because of the news event, but eventually I would do 2 micros and then scale up from there. Like, if this strategy works and I have success doing it after maybe 2 weeks or a week, then I scale up and I do 4 micro contracts, and we just keep building that way. That is kind of the decision that we made last night. So instead of only trading one strategy only and only waiting for a very, very specific setup, we are going to have more of an open playbook. Matterman trades, that is correct. Yep. You can basically just get into a micro and flip the contract is what they call it. You just get in and get out right away, and that does count as a trading day when you're trading your evaluation accounts. If you do that to get to a payout for Apex once you're funded, you can only do that for 20% of your days. So you need 10 trading days between withdrawals, which would mean that you can only flip contracts on 2 of those days for when you have the funded account. If you flip the contracts for more days than 2, it's not like you'll get disqualified or anything. You just have to trade a couple more days. All right, well, this price is not really what I was looking for. Kind of had a nice move here, and now we've just been chopping. Chop City. Gold is just chopping in a range. Yeah. If we start seeing some momentum here, like this, makes me nervous. This move right here, these 2 candles, I don't like seeing that. That thing got smacked down. Well, slowly trying to make a move up. Can we push up past? I think what I want here, I want this to make new highs above this. I'd like to get it maybe up close to VWAP and then a pullback, and then I'll look to enter on that pullback. That's what I'd like to see. If this just comes back down, then we're just still in this same channel. We need to break out above here. I need to use the restroom. I'll be right back. All right. Not long and then had that regret feeling. Yeah, that's always a sign. I hear you, man. I hear you, Alpine. There's a fine line because if it doesn't feel right, you know, for me, it's like I don't know. I go back and forth a little bit with that because it's also, if my gut feeling is telling me to get out of a trade and I don't, and then it stops me out, you know, or I go from profit to loss. ES. Apex, yeah, I traded everything ES on my evals for the most part, I think, anyway. Yeah, glad we didn't get in on this. Like, this is, I mean, right now it's just in a choppy area right here. As long as we stay right here and right here. Honestly, right here and right here. Right here is a no trade zone. Right now I'm working on my TradeZella. Actually, I should show you guys. So here's my TradeZella where I'm setting up the different playbooks that TradeZella now has, which is pretty cool. And basically you can track like pullback entry. If I click on that, it'll show my stats for that specific trading strategy. And it'll show how many trades, win rate, profit factor. It'll show everything, you know, and as you compile this data, it can be very helpful. Same with like, basically I created a strategy. I'm trying to create a strategy for any trade that I've taken in the past. Even if it's a trade that I don't want it, like it's not a trade I want to take. For example, a revenge trade. Like, obviously I don't want to ever take a revenge trade, but it has happened. So I want to have that so I can actually visually see in my mind that if I take a revenge trade, if I would just cut out revenge trading, this is how much it's cost me. Like, that's my mental, like, that's what I want to be able to see. Same with going on tilt. Like, if I go on tilt, which to me, it's like revenge trading is the first stage, and then going on tilt is like the final stage. So hopefully I don't ever do that. But yeah, pullback entry, gap fill, a gap fill to the upside, a gap fill to the downside, and then just a technical trade, you know, double top channel, trading in a channel, that type of thing, technical trade. An intuition trade, where you're really just entering a trade based on your intuition. You're not really having a plan, so to speak. So, like, I want to be able to track that specifically. And a reversal trade, if you're trying to pick tops and pick bottoms, like, what's your success rate when you try and do that? I still need to create another one for a momentum trade. Anyway, I think it's pretty cool. I think it's very. And then, at the end of every day, I import all my trades into TradeZella, and then I classify all my trades, take notes. Basically, I use really taking this TradeZella for the last 3-4 weeks. I'm taking it a lot more serious, and so I can track my data and track my trades and really get more detail with it. But man, this is selling off now. This feeling like a bull trap here. Are we going to test these lows? That's the question. Okay, here we go. It's gonna. I would think it's gonna make new lows here, but I mean this level down here, the 4180. It's trying to bounce a little bit here. We'll see. Oh, nice. Yeah, if you're used to trading NQ, you might get impatient with ES. Or at least for me, I'm so used to trading ES, like that's, well, yeah, it's the only thing I had really traded for a long, long time. And I switched to NQ, man, that thing is violent. I was not used to it. All right, NQ about to make new lows here. Is it gonna do it? Are we gonna see some volume, or is it just gonna bounce? More clean on ES? Interesting. Yeah, I could see that. Now it looks like we're going to get a bounce. Didn't quite make the lows here. I don't know. I do not know. It's going to make a double bottom here, huh? Oil really hasn't done much. Gold just kind of hanging out. Oh, okay, Apex. I see. So you start with the 60-minute chart. Copy. Do you trade on the 30-minute chart then? Man, that would be something to get used to. Definitely, like, I can see, like, it would just be different for me. Totally different. Okay. Wow. Very nice. Yeah, I was, you know what? I should actually. Yeah, the 60-minute chart. 4190 is definitely a level there. And when we definitely see, yeah, here breaking below this level. Yeah, I had shown this earlier, but this was a really nice trade. We were in a really nice channel right here. When we broke this channel, man, that was would have been a pretty impressive trade. Yeah, I see what you mean. Then from there you pick your levels, and then from there you go in and you actually enter on this. Makes sense. But man, this is quite a bounce. Quite a bounce. Tested these lows, I would say, and now we've. Very interesting. Yikes. It sounded like something just fell over upstairs. Usually I take lunch at this time, but I'm gonna wait to take lunch until I have to leave. I have to leave around. I'm trying to think how long it takes me to drive up there. Around 2 o'clock. I have to leave around 2 o'clock. Hey, yeah. It's definitely like ES, I feel like takes more patience. Like once you're in a trade. Like once you're in a trade for ES, it requires a little bit more patience. I feel like when you get in a trade with NQ, it's usually pretty active, or it always feels that way. Here's the blue line. We're going to keep drawing it. I need to go with a little bit higher tick chart on NQ. Yeah, I used to trade options too, Apex. I used to trade options a lot. Finally got tired of all the... Tired of having to pick the right direction and the right time. It keeps moving higher here. I'm not quite sure. I've heard it say that the ES, a 2000 tick chart, is similar to a 3-minute chart. Let's actually just look, see if we can see it. I don't know. Feel like it's probably more like a 2-minute chart. Yeah, 2-minute chart I would say is probably the closest. I would say 2-minute chart is probably the closest. Any new lines drawn? Here, let me show you. All right, let's go back to 2000. Blippy, our line is still holding, by the way. No new lines drawn yet. Do you need me to draw one somewhere, Blippy? All right, what are we going to do here? Right, it is. Usually it was like closer to the 3-minute chart, but today anyway, it's closer to like probably like 1.5-minute chart actually, if you want to. The Alpine indicator, yeah, maybe I'll use that line, but the line strategy. That's kind of my thing, and that's what I'll name it, the line strategy. $2-0 for the day. Nicely done. Let's go. It's a great time to stop. Yeah, my biggest struggle used to be slow, trendy up days. Man, they would take my lunch and then some. I just really struggled trading those days. Dom, I don't. I just watch the price action. I don't really watch the time and sales or the Dom. I don't. Nice. Hey, very nice, Alpine. Let's go. I can't wait till the May withdrawals are done. Like, I think end of next week or the following week, then I can update I can make another video on the top traders for May. Can't wait to do that. You know who I would class as the top trader right now? The top trader on Apex is Brian from Woodside, New York. I think that's his name, I think, anyway. Yeah, Brian from Woodside, New York, I think has been... Brian from Woodside, New York has been the most consistent and most profitable person taking withdrawals this year so far. Even though there's been others that have taken out more, like he is consistently in the top 10 in withdrawals every month, which is very impressive. Yeah, I know, right? Alpine. I know. I know. I've thought about that, Alpine. It's kind of humbling, Alpine. That's kind of feel like you just took a shot at me. Just kidding. But I know exactly what you mean. Yep. I actually had one guy send me a comment. I think he was I think he was like in the top 20 withdrawals. And he sent me a comment, and Yeah, I was thinking about doing some interviews. If I can get some of these people to agree, that I'd love to do some interviews of the top traders and just pick their brain. So, yeah, I know, Alpine. Here we are. I've actually thought about it, like, this sounds kind of weird, but if you would make it to withdrawals and you would start becoming a top trader, I could also see a lot of issues coming out of that, and continuing to have a YouTube channel and trading live. That could be a slippery slope to go down on, but I'd be up for the challenge. No, I hear you, Alpine. I know. Oh, Bobby, sorry, I did not see your comment. Yeah, I think Replicanto, and I use the Apex trade copier, me personally, but I think if I would have to, just from hearing feedback from other people, I think Replicanto is maybe a little bit more, maybe a little bit better just as far as not having any issues, but I use Apex trade copier and I haven't really had any issues, so I keep using it. No, I think Apex one is called Apex Trade Copier. Or let me check. Yeah, if you go to Apex and you click on Tools, right here, Trade Copier, and then here, this is the one I have. I don't even, I think it costs, it's a one-time fee. Yeah, right here. One-time fee of $150. Not sure what the Replicanto one is. I think it might be the same. I'm not 100% sure. Did you use the copier doing evals for 19 account? Not for like all 19 at the same time. It was a little bit sporadic. So I had started the first, what was it? The first 9 evals I passed, I basically did one at a time. And then I went through a little bit of a phase where I kept doing one at a time, and I was blowing a lot of eval accounts and kind of trying to pass them in one day. I went through a stage where it was pretty bad. Then I switched to, I traded all 9 of them at the same time to get the final, or 10 at the same time to get the final 10. The final 10 funded, or the one that I have my YouTube on series on, I traded those 10 eval accounts at the same time that I got past then. And it really helped because once I tied all 10 of them together, previously when I was just trading one account, I was not taking them serious enough, like kind of just willy-nillying it. It was terrible. It was terrible on many different levels. So that's why I tied all 10 of them together and I traded all 10 of them at the same time. I took my trading a lot more seriously, and yeah, I passed all 10 of them for the final ones. But all right, this is kind of getting me interested here. I'd like to see a little bit more volume. It seems very slow, but if we can make it up past this line here, right here, we can make it up past this and then pull back. That's where I want to enter. Basically, I want this. I want this to happen like this, and then like this, and then like this. If I draw it, then it has to happen. Or something like that. All right. Okay, market. Let's see if you can do it. That's what I want to have happen, but we might just chop all day, I guess. I don't know. Usually when the Fed speaks, after they're done speaking, usually the market kind of picks a direction and goes. But so far today, it's just been trading in this range, 41.94 to 42.06. All right, now we're pulling back again. I might not get another option to another entry today, which I'm okay with. Honestly, I feel free today. This is weird, but I feel like freedom. Before, when I was only trading that one specific strategy, it felt like I had a lot of chains on me and and it tested my patience for sure, which was good, I think, but I'm ready to open the playbook and trade like I traded my evals. I am excited. But the thing that I definitely watch for when I open the playbook that I watch for is making sure I'm not just taking trades to take trades. I need to make sure I'm not over trading. That's definitely what I need to be aware of and shut it down if it starts happening. But I feel definitely not doing it today. Feel good. Matterman, a lot of contracts, a lot of way over trading Matterman. And again, I was trying that. Those are two different things. yeah, the problem was, so so when I started trading and doing this journey to get to 20 funded accounts, my first 6 tries, I took it, not slow, but 2 mini contracts. And I was 6 for 6 on my first 6 evaluation accounts getting it passed. I was like, wow, this is easy. Then on the next ones, I scaled up. No, I didn't really scale up, but I ended up over trading and I passed 2 more evaluation accounts on one day. Like in one day, I passed 2 of them. And it was the worst thing for me because it created some very, very bad habits. And then that's when I thought I could just keep doing that. And I just thought, oh, this is so much faster if I just do it this way. And I ended up way over trading. And I went through, this is kind of embarrassing to say. But yeah, I went through, let's just say I went through over 30 evaluation accounts till I finally learned my lesson. Just pretty sad to say. But we learned our lesson. That's what's important. And then that's when I changed and we reined it in. And I went back to just being disciplined and trading it like I should, not being a crazy person. I also, during that time, just in full transparency, I was also trading the NQ for a good amount of time during that time. And that's when me and NQ divorced. I did learn the lesson the hard way. My dad always told me, he can try and teach me something, or I can just learn the lesson the hard way. I chose the hard way on that time. Exactly, Dom. It was a 90% discount during those times. And I literally just kind of was like, dude, I didn't take it serious. I did not take it serious. For a 50K account, you could get it for $17. And I was just going absolutely crazy with them, not taking them seriously at all. It was terrible. And it wasn't even as much that it blew a lot of money, but it actually created some very bad habits that I had to train myself off from. But I did learn my lesson. I actually, yeah, it was crazy times. All right, we're just slowly grinding up here. This is going to be important. Can we push through here? That's the question. I feel like that's part of Apex's strategy with doing these big discounts constantly. Is like they get 10 times the amount of people buying these evaluation accounts than other prop firms do. They're just so much less money, and then people are a little bit more reckless with them. And yeah. But that's not Apex's fault. I'm just glad that. Actually, I was curious. Does anyone know, is there another prop firm out there that allows you to have 20 accounts? I know one allows 10. Hang on. All right, we're back. All right, we did get a little pullback here. Buell knocks in 2 others. Okay. Okay, so it was Buell knocks that you can have, what was it? 10, I think with Buell knocks you can have 10 accounts, right? Or can you have 20? I'm not sure. Oh, I wish we were above this level here before this pullback, but I'm going to wait. Kind of want to reach, I want to get above this 4210 level. But we're running out of time. Running out of time. What's NQ doing? Not a whole lot. Gold, not a whole lot. Oil, not a whole lot. Yeah, market's been just kind of blah since thought we'd see more action today, to be honest. We'll probably get the move once I have to leave at 2. At 2 o'clock is probably when the big move will happen. And I'll not be here. After passing, once you pay for the funded account and you sign the paperwork, usually you get the funded account within the hour. Usually I got mine within like 5 minutes. So yeah, you should get it that day. So you basically, once you pass your evaluation account that evening, usually between 7 p.m. and 10 p.m., you'll get two emails. One email will be to sign from PandaDoc to sign your contract, and the other email will be to pay for the funded account. Once you've done both, I usually would get that account within 5-10 minutes. So you are good to go the next day. So yeah, really quickly now, I will say they were having issues here a couple weeks ago on TradeEvade accounts. And it was on TradeEvade's end where it actually took like a day or so if you had a TradeEvade account. Now I think they've cleared that up, but that was a little bit of an issue here a week or two ago. Yeah, exactly. If you pass an evaluation account, basically there's two rules, or that you need to get to the profit threshold. You need to trade for 7 days. That's it. Like, it's really is that simple. And once you've reached those two things, then they'll send you the paperwork, and they will. No and ifs or buts about it. If you do those two things, you will get a funded account. And same with payout. I mean, they have a little bit more rules on evaluation accounts. You can trade on the news, but on a funded account, you can't trade the news. Now that means that you basically can't put an OCO order one to the top and bottom and basically look for a huge move right at the news. You can trade, like they call it, you can trade after the news, after the initial burst. That's kind of how they class it. So yeah, but hey, no problem. No problem at all. Is this your first time using prop firms? Okay. Hey, well, good luck, Eamon, and don't feel bad about failing the accounts. It happens to everyone. The biggest thing is on those failed accounts, just make sure that you're learning something from it when you fail. And don't try not to keep doing the same thing over and over again, and failing it the same way. As long as you're learning something when you're failing, then it wasn't a failure. But good luck on your hopefully, passing your evals and getting funded and getting to payout. Good luck. Thanks for tuning in. How are we doing? I got my fresh haircut. Dude, I got a haircut yesterday too. Feels great. No, it was Wednesday I got a haircut. Hey, you're welcome. And if you need a discount code, I have one right here. If you want to use it, that'd be awesome. If you don't, it's okay. Just make sure you use one. It is definitely worth it. Man, this market is just... I definitely don't feel like I'm going to get an entry or a setup here until I have to leave in a half hour. Exactly, Alpine. And that's where I like, man, I wish I would actually, me personally, and I know there's people with different opinions on this, but if you're a new trader, finding a strategy that you're comfortable with and then trading that strategy maybe a month on a sim account, on a paper trading, just to see if your strategy works. But then I would recommend people to switch to find whatever prop firm that's offering a really, really good discount where you're only risking maybe $30 or $40 per evaluation account, but then use an evaluation account to further test the strategy, because then you actually have skin in the game, but it's not too much, but there's some skin in the game where you will start to psychologically and mentally, you will start training yourself on how to deal with losses, how to deal with runners, how to deal with the things that are the most important in trading. It allows you to get that feeling without risking a lot of money. It's a very, very small risk, but it allows you to really get a feel for how the market really is and really how it is. Because if you trade in a sim account, just a paper trading account for 6 months, and you show all these great profits, I really take that with it means zero. It really does mean nothing. I know that sounds harsh, but I'm switching over to actual real money, completely different ballgame. Yeah, and don't try to pass it one day. No, definitely not. Like, trade it like you would trade a real account. Take it serious and learn from it. You purposely, honestly, you shouldn't be passing evaluation accounts in one day. Because that is not reality. And that's talking to myself. I messed up when I was trying to do that. Look at your risk management the same way that you would look at it. If you're trying to, pass, or you're trying to make profit on your own personal account or whatever it is, but you definitely shouldn't be passing in one day. Yeah, but that, Eamon, that's exactly kind of my point. Like, it teaches you patience. And patience is something that if you don't have it, then you need to acquire it in this industry. Like, if you don't have patience in trading, then you're not going to make it until you create and have patience. And the only way to get patience is to practice it. So, it's a great way to do it through evaluation accounts. Once you've proven that you can be patient in evaluation accounts, then when you switch over to a funded account, now you can be confident that you can be patient in a funded account, and it'll carry over. So, yeah, just be patient. Don't compare yourself to other people either. Don't compare yourself to other YouTubers and other Discord groups and anything. And, just trade the way you trade what you're comfortable with, and take it slow. Take it however slow you need to. There's no extra points and there's no extra rewards you get for passing an evaluation account in a day. There really isn't. So, and it's just not realistic to. And that's coming from me, and I did do that for a little bit of time, and it creates some very, very bad habits, and you don't really learn anything from trading that way. You really don't. All right. I don't know what to think anymore. This thing is just, it's kind of a dull Friday the way it looks. Thought we'd see a big move or at least a nice move, but just doesn't feel that way anymore. It's already 1:30 and it's just not much happening. But I'm happy with today. I don't know. I feel, like I said earlier, I feel free, and I'm looking forward to trading like I did on my evaluation accounts. I know it won't all be good. We'll still have losses, but I'm looking forward to it. Yeah, exactly, Eamon. And that's where it's like, if you trade that way, it's like you're not learning anything really. It's just that need to keep going, and that's impatience. Like, that's the impatient part that we all have to struggle with, Eamon. You're not alone. You're not alone in that. That's a trait that every trader needs to develop, is patience. But yeah, I mean, just keep learning, and I'm always hesitant to say don't give up, but yeah, don't give up. If you have confidence, and you don't need a certain degree or a certain college education. Nothing is. It's really a battle with your own self. Yeah, exactly, Garcia. It takes time, and I know like the amount of learning, and it obviously depends on how people are blowing evaluation accounts. If they're just blowing them and not learning anything, then now that's not useful. But if you're learning something and blowing evaluation accounts, the price that you pay for that is very, very small compared to if you would be trading your own real money. Like, it's basically your tuition cost for trading is very small compared to if you would be trading your own real money and trying to learn the hard way, like in the real world. It's just, that's why I think, my own personal opinion, but that's why I feel like evaluation accounts and prop firm trading is such a unique thing where it really is beneficial to new traders. And some people, they'll go up and down about, oh, you could have saved all that money and, just have a real account and put that money into a real account. And I'm like, and what? You think then for some reason that you wouldn't blow that account and you just have one try at it? Like, doesn't make sense. Exactly, Garcia. It's a cheap tuition fee. It's a discounted tuition fee is what it is. But they don't have Alpine, like, and you're right, I get what you mean. They don't have to fail. Well, in order for them to make money, they do. But it's inevitable. Like, it's inevitable that there's this percentage of people that will fail. Like, I would go out on a limb and I would almost guarantee with 100% certainty that there is not one trader that's taken a withdrawal from Apex that hasn't also blown evaluation accounts. Like, there's no one that went in with one evaluation account and they only ever had one evaluation account and they got funded and they've been getting payouts ever since on that one funded account. I would go out on a limb and say that's not ever happened, but maybe I'm wrong, but I would be shocked. Into trading stocks. Oh, I know. Back when I was trading options, I traded SPY options for a while. Oh my goodness. We're not even going to talk about that. I mean, yeah, obviously I do. I think Apex is the biggest prop firm out there right now, and they're just getting bigger. Like, they just continue to grow month after month. So I feel like they're here. I'm not sure I should say this. I'll say it, but this is not 100% certainty, but I know that they are working on some other things as far as different rules and actually even changing their rules to even make it better. So they just continue to get better. They have changed their withdrawal policies. They've changed their rules. And every time they make changes, it actually is for the better of the trader. So that in combination with the discounts they offer, yeah, I think they're just going to continue to get bigger. Exactly, Garcia. That is exactly true. People look at prop firms, or some people do. They look at prop firms as, oh, they're putting all those rules in place so that you're guaranteed to fail. And like that and it's really, the market is brutal enough. Obviously, yes, they need to have a threshold of, how much you can lose and then you'll blow an account, obviously. But, I question. Nicola, no real pro will trade eval accounts. Okay, I'm curious, actually. Yeah, 2 times a month. Huge difference. They changed the minimal withdrawal from 1,000 to 500. I mean, they've made a ton of changes over, over time. They've made a bunch of changes to. And then the one time when they tried to make a change on the withdrawal and the threshold, that I felt like definitely wasn't benefiting the trader, and there was a lot of outrage over it. They rolled back that change and said, yeah, okay, they thought they were helping the trader, which I kind of get what they were thinking. But they heard the traders and they reverted the change and did not implement it, which says a lot about them. Yeah, I agree, Blippy. It's okay. Going back, Nicola, that's actually a good question. Is no real pro will trade an evaluation account. Now, I'm just curious. Like, this is not me challenging that. I've thought the same thing, and I'm like, why not? Why wouldn't they? To me, if they're that good at trading, there is minimal risk and there is maximal reward. Why wouldn't they? Do they just not like money? No. I think they don't do it because they like to have, and they're used to complete freedom to do whatever they want. So any kind of rules is what keeps them from doing it, I personally think, but I might be wrong. And yeah, tax is true. But everybody wants fast money. I mean, that's true. Yeah, you could trade a long time on a 300K account with Mon Micro. Yeah, you could. All right, we're kind of drifting, kind of slowly selling off here. Yeah, I don't want to, yeah. I guess, yeah, you're right, Nicola. I guess I was thinking more of the fact that, why not do both? Yeah, it's true, Alpine. There's probably a lot of different reasons. It's just something I thought about. For example, I always said this, like let's just take, for example, I don't want to keep picking on Patrick Wieland, but he's kind of easy to pick on. But he's constantly saying how he's making $3,000 a day. Like, it's easy. I don't want to say he says it's easy, but like, that's basically, you constantly see, he's making $3,000 a day, and he's with Top Step. Well, he can only have one. Well, I think you can have now 3 accounts, maybe, but only one on a live account. I don't even know. And I'm just like, why wouldn't he doesn't even have to do it on stream or whatever, but why wouldn't, if he actually can make that good money, that much money every day, and be that consistent to what he says, why wouldn't you get 20 Apex accounts and you could make millions? Ask yourself that. And don't tell me like these traders, there's no way they would walk away from millions of potential dollars for really not that much risk. The real answer is because it's a lot harder than what they make it appear to be. Yeah, that's true. Garcia. They could put the firms at risk. I mean, obviously, yeah, if a pro trader would come in to Apex, I mean, then obviously they would very quickly roll him into an actual live account and copy his trades. So, if they do that, then Apex would just make more money. They just copy his trades and take 10% of his payouts. The 10% payout might actually be a big reason why they don't They don't do it as well. Oh, I know he does. Like, 100%. Right, I agree, Nicola. I agree. And then, because that would be then, yeah, that's true, Nicola. That's probably why. And the reason would be it would be very difficult to copy those trades on the algo trading because they happen so fast. But anyway, it's 148 now. I really do not see me getting in any trades the next 2-3 minutes. Oh, I know, Nicole. It's just, yeah, I hear you. I don't know who used tops. I don't either. Honestly, I have no idea why you would go with them. No idea. Like, blows my mind. They have to be paying these top streamers like Trades by Matt, Patrick Whelan. Like, there's a lot of traders, like, they have to be paying them a nice amount of money per month to keep promoting Top Step, because I'm sorry, but anyone that does a little bit of research on prop firms quickly sees that Top Step is not the best option. It's just that simple. Unless you just like spending a lot of money on evaluation accounts and have more rules, then I guess maybe that's a benefit for you, I guess. But anyway. All right. Okay. I'm gonna end my stream. By the time I record my summary video of the day, upload that, it's gonna be time for me to get to my appointment, and I am not gonna be back in time for the close. So yeah, this is it for the week. I hope everyone has a great rest of your day. I hope you make more money than you've ever made before. But yeah, trade well, follow your rules, and also have a great rest of your weekend. And I hope to see everybody again Monday. Let's do this again. All right. Later.